yourself, hit the like button, subscribe button on YouTube algorithm stuff, so you get the videos I put them out. See, I'm thinking, I'm analyzing that data. But like I tell you every day, the data that release us is false. Listen, the Chinese economy is imploding. Okay, there are protests in the street. The populace are what we would say wilding out because they are losing money hand over fist. The COVID restrictions
hand over fifth.
Putting so much
hand over fifth. Is that a Freudian slip?
On the economy that everybody's losing money. Okay, the industrial sector is down 3% for the first 10 months of the year. The manufacturing sector is down 13.4%. But what's worse is the petrol, the coal. The fuel processing industry is down 70.9%.
Good.
That's how crazy it is in China right now. And you got to remember, China is the world's second largest economy. So there's no way that China implodes and we don't feel that all over this planet, all over the globe. But how that's, and this is just my opinion, please don't buy, hold, or sub it on anything I say in these videos. But I believe a lot of these bad actors, a lot of these hedges are using Chinese bonds and along with some Chinese companies and using it as collateral. So as these—
Wait a minute, I thought they banned that already. I thought that's already been banned. It's already been described as a catalyst. It's already failed as a catalyst. God, it's just all recycled nonsense, isn't it? My God.
These companies implode as the whole economy of China implodes. These bad actors are in trouble because they can no longer use these Chinese bonds, these Chinese loans as collateral because they have diminished in value. And when they can't use these as collateral anymore, there will be margin calls, there will be forced liquidations, and they will be forced to cover their short positions. And like I tell y'all every day, when they start to cover those short positions, AMC, GME, and all the other mega stocks should go to the moon. The bottom line is this.
No.
China is in trouble.
And only he knows it. Only this guy knows it, and only this guy has figured it out. He's going to profit off of it.
They had water issues. I mean,
give me a break.
China's in trouble. China's in trouble, bottom line. And because China's in trouble, that's going to implode. Probably the economy in Europe. Help push.
Look at him. He hopes that it happens. He hopes that the economy implodes.
And that's going to send—
what a tool.
AMC, GME to the moon.
No,
anyway,
it's not.
Hit the like button, subscribe button.
I highly doubt that. Okay. So, oh, well, there it is again. Well, good evening. So let's check out what Jeff Forbes is saying. Always try to listen to him. See what he's got.
What's going on, everybody? It's Jeff here. Welcome back to the channel. I hope all of you had a wonderful Thanksgiving. I'm excited for the market to open this week. Last week there was just low volume.
What's up, M3D?
Investors took an early, leave to enjoy their holiday with their friends and family. And like I said, the market just continued to base. Now, there's a couple things I want to mention before we get into the topic of this video, how it might affect the market going forward, and what to expect this week. So we're going to cover that briefly, really quickly.
All right, let's do it.
We've once again broken out of this $394 to $400 range. Now, is it going to be another fake out like we had to the upside and to the downside, or is this 400 level going to hold as support and we're going to make a bigger move to the upside potentially?
Oh yeah, it's going to 5,000.
Well, that all
500
depends on, in my opinion, two specific things that we're going to cover. The first is everything that is happening over in China right now. Okay, their Communist Party, as you can see from this picture here, they have a zero COVID policy and they're not backing away from it. Now, Apple has a huge problem with an iPhone factory in China, and they're estimating that Apple might lose potentially $1 billion a week in iPhone sales, and that could total out to be $8 to $10 billion. Okay,
is somebody getting married? What's the deal with this ad here on his side? That's why I block ads. I don't want you all to see what's happening in my personal life reflected in the ads.
Because of this factory being shut down. Why is that important for the entire market? Well, first of all, Apple makes up the biggest market share for SPY. So when Apple pulls, the entire market is going to, with it. When you're looking at this 1 hour chart, you see something that sticks out immediately to you. Okay. You've got, SPY sitting up here towards the high of this range, and Apple should be around this 155, 166.
What?
If it was closely correlated with SPY. So when Apple is weaker than SPY, if Apple continues to pull to the downside, which obviously you've got this 147.50 area, okay, which is this chart is looking very, very weak. We break through this, pulls to the downside, the market has a lot of room to the downside. So keep an eye out on the futures that are going to open.
Oh, yeah.
6 hours from as I'm making this video.
About 1 hour from now.
And where things go on Monday. Now, the next thing I want to talk about is going to be happening Wednesday, the 30th at 1:30 Eastern time. Okay, Fed Chairman Jerome Powell is going to be speaking again. All right. Now, last time the Federal Reserve, they came out a little bit dovish saying, listen,
I mean, this isn't a meeting. It's just a speech.
We knew that 75 basis point wasn't going to last forever. Here's what investors are going to be, really focused on going forward. Last time Jerome Powell had given a speech after the Federal Reserve was dovish was Jackson Hole, where he really shocked investors. The market pulled very, very hard. That happened at the end of August. Now, the Federal Reserve and Jerome Powell still have a lot of work to do when it comes to inflation. Okay, and investors are going to be, really keeping a keen ear open to not only the inflation numbers.
I agree, Model 3, dude.
Only, how long they're going to,
it's just a matter of time. It's borrowed time.
Their rates, their rate hikes going to be slowing down for, how long they're going to be able to keep their rate hikes or rates up before they begin to lower them. But now here's where things are going to change. We're going to be slowly pulling away, and this is going to happen over the next few months. We're going to be slowly pulling away from that inflation worries. And now things are going to shift, and we're going to be focusing on stagflation. What's the potential for stagflation? Okay. What's the potential, for deflation? Also recession.
Well,
those
maybe,
are going to be
or maybe
over the next 6 months than inflation is going to be. There's a lot of signs that inflation is coming down. And here is the reason for that. Okay. And remember,
I don't know what these signs are.
It has nothing to do with the prices that we see at the grocery store. It has nothing to do with the prices that we see anywhere. Okay. The price of the pump, the price of oil has nothing to do with that. It all has to do with how CPI is calculated. Okay. Now, if you look, gas was up 60-70%. Okay. From, 2020, let's say July 2021 to where it was in July of, 2020. But however, if it's down 20%, okay, even though it's still up an astronomical amount from 2 years ago, the calculations and how it works, if it's down, if gas is sitting at $4 a gallon, it's still up, it's still high. All right. However, it's going to show a 20% year-over-year decrease. All right. So you have to keep that in mind, how their calculations work. And inflation will begin to slow down. Now things are going to start to shift. Keep an eye out for that. Like I said, Monday, I expect a little bit of volatility.
So he doesn't expect any type of recession? What? Okay, anyway.
Volume coming back into the market, after a long weekend. Tuesday, potentially slow down. And obviously Wednesday.
It's a good point, Model 3, dude.
Ears open, waiting for Jerome Powell to speak. Okay, now let's get into what I want to talk about in this video. Last video I made.
Sell more apps, I guess. I don't know. Increase the amount they take per app from 30 to 60%. I don't know. Yeah. Not good. Not good.
It was covering this article that had come out. Is Amazon planning to invest $1 billion a year in movies? How it could, you watched AMC pop a little bit, try to get over that $8 level of resistance.
Didn't happen, right?
For quite some time. How it could potentially affect or help AMC. Okay, and what are the positive effects of it? Now, obviously, this isn't going to directly go towards AMC. We're also talking about $1 billion here. This isn't 50 million or 100 million. It's $1 billion. AMC has a lot of theaters. It dominates, a good percentage of the market share, and obviously it would benefit. Now, over the weekend, things started to change a little bit, and it really kind of brought me back to deja vu. If you guys remember, going all the way back to probably about a year and a half ago, the rumors of Amazon potential buyout, and then you also have Disney potential buyout. We want to talk about this in a little bit bigger of a fashion. So first of all, let's focus on Disney. The first thing I do want to mention is the CEO change. Now, Bob Iger, he was one of the most successful CEOs, as stated right here. A lot of people like him, investors like him. They're looking for a change. They're really focusing on the growth of Disney. Okay, now Disney did start to branch. All right, they had
$1 billion. Okay. If AMC shares were $8 a piece, which they're not even $8, but if they were, that would be equivalent to 125 million AMC shares at $8 a share. Just FY, just to put it in perspective.
Their Disney
Hey,
stores
Chris.
all over the country. Okay, they had purchased ESPN. They had really started to spread their roots a little bit deeper. Okay, it is very difficult to get as many people as they can to come all the way down to one of their two locations, either Walt Disney World in Florida or Disneyland all the way over in California. It is much easier to be able to sell to where they are. All right, and one thing that Disney had kind of been a little bit late to the party was their Disney Plus, their subscription-based service. They had all of these movies that they could quickly stream, create a platform. It just came out at the end of 2019. They were a little bit late on that, and obviously Disney, to really want to get a little bit higher of a market share when it comes to the little bit more
Okay, streaming,
theater, would
streaming,
really
streaming.
turn into a mini Disney World. Okay, undertaking. And let's talk about what the benefits could be that are a little bit more practical. It's where the exclusive deals could come from. Okay, now you have Amazon that says, listen, we're going to invest $1 billion. You've got Disney coming out, Terry Standpoint. Okay,
Okay, so he's got nothing basically. Got nothing, and it's stalled.
help
So
the
that's
stock
good.
in a little bit more of a practical fashion. Well, that were all valued based on potential future revenue. Now, this wasn't locked in future revenue. This was literal potential future revenue. And we were in an entirely different market, but investors were buying it up saying, yeah, in the future, you could potentially make this money. So we want to get it now. That's where their valuations would prop up to. And then you've got AMC, where investors, and I'm talking about, your big funds, your public media as well. Okay. They don't look at the future revenue at all. It's all focused on their debt as of right now. All right. Now, Adam Aron has, while this is completely,
Well, I don't know if I agree with that.
subjective and room for art.
I mean, yeah, they're looking for the future. They're looking to the future of can they dig themselves out of this hole? And well, we're gonna look at something here in a second, but the consensus seems to be no, they probably can't.
Argument, and obviously there is both
But it doesn't reflect current conditions. It reflects a future expectation.
sides to whether he's done a good job trying to pay down some of their debt for the company. That's a whole different story. Okay, but he has had the the openness to be potentially sign something exclusive in order to
100%.
take action to pay down some of their debt. That's the biggest thing that hurts him right now, and that seems a little bit more practical in the short term than a massive buyout. Okay, so one last thing I want to talk about before I wrap up this video is, and this also could affect Apple and the entire market going forward, is over this weekend, all right, there was potential rumors that, Google and Apple are going to be like, listen, you know what? We're going to take Twitter, off of our, our app store, okay, and Google store. And, people that have these, Apple phones and Google phones, they're not going to be able to download Twitter, and that's just going to, crush, Elon Musk and Twitter, right? And so, he had come out and said, listen, if that happens, well, I'll create my own phone. Well, here's where things is the potential there for that? Absolutely. One, he has a massive following, but also think about the undertaking to be able to do that, right? So before even you can formulate a plan, before even like the construction of it, the research and development, and all that money coming out up front, he could literally say, listen, these phones are valued at $1,000. We're going to take orders right now for $500, raise a ton of money. Okay, similar to almost what he did with the Boring Company and the flamethrower, raise a ton of money, then use that capital to be able to create it. And therefore, it's not a massive risk that they have. Now, they do have the risk that they're taking people's money, but from a financial standpoint and a capital standpoint, it's not a massive risk. Think
Okay.
about how,
Sure.
companies like Disney and Amazon, when it comes to buying them versus signing something exclusive, knowing that they have work to do and therefore it'll be exclusive to AMC. They'll be able to show their movies in their theaters. It's a little bit better of a risk reward from a business standpoint than them trying to buy a company that, we are in the potential of on the brink of a recession as of right now. And also,
okay, so he
AMC
does.
have a lot of debt.
Yeah, I don't think it will ever happen
Right?
either.
So it'd be a massive undertaking, and it would be, a red line on their books for quite some time. I think the probability,
Not going to
like
happen.
I said, something exclusive happening out of this, which would lock in, right? Would lock in a massive amount of revenue for AMC. Okay.
No, it wouldn't. It
Is
wouldn't
a
lock it in. It absolutely would not lock it in. What if What if, for example, 65% of the movies suck? I don't know. It's a possibility. Market's not going to lock that in. Ridiculous. Okay, so Jeff Forbes, at some point, he started taking stupid pills, and it seems like he's still taking them with respect to that. Okay, here's CSI. Oh, by the way, we might as well just take a look at this now. So this was an article that was on investing.com uh, Friday. AMC stock is, quote, overvalued and could crash 85%, says Citi, after cutting price target. Shares of AMC Entertainment are vastly overvalued, according to Citi analysts. The analysts reiterated a sell rating and cut the price target to $1.10 per share to reflect updated estimates. They see an 85% downside risk for the sell rated AMC stock based on the updated price target. Quote, we maintain our sell rating as we believe that the shares are overvalued at prevailing levels, they said in a client note. The analysts made the latest updates to Citi's model to reflect Q3 performance and their latest outlook for AMC stock. Earlier this month, AMC said its revenue rose 27% to nearly $1 billion, although net loss widened to $226.9 million. Both top and bottom line results came in better than expected. So the revenue rose 27%, although the net loss increased. Okay. The management also noted that they expect to see a continued recovery in the U.S. box office, which should result in a 15 to 25% growth in 2023. Still, the analysts' base case scenario is more skeptical about the U.S. box office growth. Quote, given the proliferation of multiple streaming services over the last several years, we see downside risk to the global box office going forward. In addition, these recent industry developments suggest that the strategic role of exhibitors may be diminishing, they added in a note. As of 9:25 on Friday, AMC stock is up about 1%. Pre-market Friday. Model 3 dude says, did the $100 deposit on Cybertruck guarantee that they will make one truck for each deposit? No, it does not. Also the semi. Did they take deposits for the semi or not? I don't know. Anyway, that should be coming out this year. Supposedly somebody is buying a bunch of them. I'm not sure that the semi, I think, or the truck. I forget. Probably won't happen. Let's see comments here on this investing.com article. Purely speculation on theater versus streaming and pathetic. Nothing here about major stakeholder in Wyckoff mining. Popcorn business, retail support, or determination of board and CEO. Every board and CEO is determined. Retail doesn't have any money to support it. Popcorn business is already saturated. Wyckoff mining sucks. Investing.com has been pretty biased this whole time. I don't know why I even use them when I have other platforms. It's been overvalued for 2 years, LOL. Sure has. So interesting. So anyway, again, Citigroup, Citi, cutting the price target to $1.10 per share. $1.10. Where would that come into? We're looking at something around here. Yeah, there you go. And indeed, that is about 85%. So, yippee. Also, we look at Apple. Oops. Back on auto mode. I don't know why I have that line there. And we compare the S&P 500 to it. Now, I don't know what the hell Jeff Forbes is talking about in terms of the S&P outperforming Apple. Don't really get that. Not really getting that here. That's an 18% decline versus about a 16% decline. But okay. And we are experiencing a little bit of hiccuping here, but we'll take some Pepto-Bismol and get that straightened right out. Okay. Yeah. Don't really see that here with this. In fact, it's pretty much spot on. So, okay. Yeah, they took deposits and are sending 50 to Pepsi December 1st. We'll see, right? I'm skeptical, but hey, you know, we'll see. Antoinette, hey everyone, party can start now. Okay, good. Permission to party has been given. All right, so here's CSI, Common Sense Investor, talking about Disney audit of AMC theaters and AMC squeeze update in Maine. Oh, come on with this loud nonsense. Why Disney will not buy AMC theaters. Well, I like that so far.
You wonder why we're doing high growth buying? We're gonna make a lot of money, that's why.
We're gonna make a lot of money going into Wyckoff mining. Okay.
What's up, everybody? It's Common Sense Investor coming at you with another video. In this video, we're going to talk about Disney, okay? Because right now, there's a lot of talk about Disney buying AMC. And I'm going to give you the common sense understanding as to why that can't happen, okay?
Ooh.
First, we're going to talk about the FTX scandal and what transpired. Then we're going to I'll show you AMC and how that will turn out, okay, with Disney. All right, but first off, right here on Twitter, we see that CZ from Binance, which is the owner, he runs this shit.
What is this with these crypto guys and their goddamn initials?
For our help, there is a significant liquidity crunch. To protect users, we signed a non-binding LOI intending to fully acquire FTX.
I could do that.
And help cover the liquidity crunch.
Okay, so this is from November 8th.
We will be...
I say Binance is the next shoe to drop. Personally, I don't trust any of these motherfuckers. So, yeah, Binance is the next to go bankrupt. You heard it here first.
Conducting a full DD in the coming days. Okay? Now, let's talk about this tweet. He said FTX contacted him and said...
Thank you, Chris. I appreciate that. Have fun with your grandkids.
Okay. We're going to buy the company.
We'll catch you later.
Before we do, we got to see the books. And they do an audit. And when they did the audit, then Binance came back, and that's DD, their audit, okay? Part of the DD. Then the next day, Binance comes back, and they spill the beans on everything that's happening. And CZ says, in the spirit of transparency, Might as well share the actual note sent to all Binance team globally a few hours ago. And you can click on it right here. It's November 9th tweet. And this is where he's explaining.
Okay, so what does this
all
have
the
to do with Disney and AMC?
Binanceans. Okay,
I'm starting to get
Binance
bored here. We already know all
the
this.
event open the books. Binance said no.
Okay,
Of FTX. Now let's talk AMC.
finally.
If Disney wanted to buy AMC, the very first thing they're going to do, and if they were going to do it, they're already in the process of checking the books. Okay? And when they check the books, for example, if they buy AMC, then they need to know how many shares there are. And when they open the books and they go to looking, all them placeholders, because I don't want to call them synthetics and nakeds and all this shit, they're placeholders. For every person that's bought a share of AMC, Disney will be responsible for them shares.
What are you talking about? No, that's not how it works. You can go to the SEC filings and see exactly how many shares there are. But shares and positions are not the same thing. Shares and positions are not the same thing. They're just not. So, I mean, this is an interesting angle to take, I guess. Disney will not buy AMC because they'll see all the synthetic shares and they will say, nope, we're not interested because we'll have to cover all those shares for some reason. Cover, I don't even know what that means in this instance. But no, no. I mean, that's not
See? Because
placeholder, right?
go
Placeholders.
ahead and buy AMC, and there's a 6 billion shares of AMC
6
out there,
billion.
then they're not getting their money's worth. And by responsible, I mean if they were to give a dividend, for example, of $1, then they knew
Pet Rock Miner.
pay out $525
I got your guy up next. We're gonna look at him next.
$524 million. But if they have to pay a dollar dividend, and they have
Dollars.
to pay it to 17 billion people who are holding shares of AMC, when they look at their books, they're gonna be like, "What the fuck, man? We're not buying this shit," and the deal's over with. So
They're gonna say that anyway.
Disney is gonna acquire.
They are gonna say that
I don't
anyway
think
without the synthetic
anybody would
shares.
acquire AMC. If they was gonna buy AMC, people, don't you think Ken Griffin would have bought AMC by now, or a shell company of his? All right, or Goldman Sachs. All right, if AMC was purchasable, somebody would have bought
So
it.
it's not purchasable because of the synthetic shares. Brilliant. Brilliant. Okay. The Devil's Stockbroker. Like I said, I think I've viewed a video at some point, but I don't remember. Don't remember. Don't even want to say, but okay. Who wants to buy a heavily in debt company? Not I. Okay. See what we got here. Cinematic. Dramatic. Ooh. What is up with that high pitched? Okay.
Hello, everybody. My name's Drew Demon, and I am the Devil Stockbroker. This video, I'm going to be updating the entire meme market, focusing on the top stocks that have been mentioned on WSB and other subreddits, as well as focusing on our favorites, AMC and GameStop. The IWM is the first thing that we'll take a look at. So
Okay,
right now,
we're going to skip around.
At a clear double bottom on the chart for the IWM. The Russell 2000 is by far the most.
All right. AMC technical
various subreddits and in the meme community.
Analysis. Right?
Focusing in on the first of our stock picks, we have AMC, which has been showing itself to be very bullish recently. The last couple of days, we actually printed a double bottom here where it bounced off of its daily 50-period exponential moving average. The overall pattern altogether has created a very clear bull flag where we're seeing a descending line of resistance right here at around $7.80. A breakout would occur after a close on the day above $8. This would be a
Breakout.
beautiful setup for AMC to continue moving to the upside. Further to this point, AMC has actually set up a new set of lower lows where it has appeared to have begun a Wyckoff spring. It's a bit early to tell yet. Wyckoffs are extremely difficult to spot clearly, but we do have, at least on the weekly chart, a very clear spring that bounced here at the $5.50 level. So this double bottom pattern on the weekly chart is very bullish for AMC. What we need to see is for it to break above this $8 level and to continue the momentum crossing above its 200 period daily moving average. That would be this red line right here. If we take a quick break to go look over at our ScourgeBot 13 and 48 EMA crossover strategy,
Oh boy,
we see that
1348.
AMC is toying right at that exact level. The 13 and 48 EMA have been crossing over multiple times on relatively low volume after a big push to the upside. This
Which
is
makes it
a moment
meaningless,
where
right?
AMC, if it's able to get a little bit more volume and push a bit further to the upside, that we can see more technical patterns working in favor of AMC and likely to cause algorithms to jump on the long side of the trade. If we go over to AMC's gamma squeeze ramp chart, we can see that AMC has just now established a new high of 4% of its float at the $10 strike level.
What
If
is
AMC
this?
crosses above $10,
Percentage of float in the money? What? What? What the hell does that mean? Oh my God. I don't know where this came from or if this guy made it. What is their obsession with in the s- contracts being in the money? Like they don't really understand. Wow.
than 4%
Okay.
of its float would be in the money for the duration of December.
I
This
mean,
is
great.
a significant but not quite gamma squeeze material, but every little bit helps. What's really gotten my attention for AMC is the amount of short exempts that have
Oh
been
my
traded on it.
God.
Here we're focusing in on a short exempt ratio, which shows
Short
a percentage
exempt?
of short exempts. Those are trades made by market makers and brokers, shorting a stock without locating a borrow over the short volume in total. As you can see back
Right. When do they do that? When do they do that? When retail investors buy. Yes. Oh my
in
God.
the second week of November, there was an extremely high concentration of short volume in this week of trading. The short exempt volume was consistently
I
above
mean, and
40%.
look, like the closing price was higher those days. Oh my God, it's amazing. Wow.
With a all-time high of 6.7%. The higher this number is, the more shorts are being used as short exempt versus just regular borrows. And this puts
This has
market makers
nothing to do with establishing positions. Nothing to do with establishing short positions and borrowing. This is market maker exemption stuff. It's liquidity stuff.
and brokers in a position where they must be able to locate these shares within 6 trading days. If the price continues to move up in this direction, then they never get a chance to cover these shares at a profit, which reduces their ability to continue to short
What?
it going forward, and it increases their risk every time they decide to do this. So if AMC continues to
What?
push while short exempts are
Why
continuing
did the price go up then if this was higher? Why did the price go up on those days?
to pile up, then this puts all of the market makers and brokers behind the 8 ball and forces them into a position where they must either continue trying to do this even though the momentum of the trade is against them, or begin to cover and actually assist the trade to the long
I
side.
mean, the market makers don't establish short positions. Like that is a basic thing. They don't take on positions. They don't want to have positions. They have to be delta neutral. They have to be neutral. That's because that's not how they don't make their money trading. I mean, how can there be God?
Helping to squeeze shorts. AMC short interest has been continuously piling up, achieving a 89.2% short score on Ortex, with 20% of its free float sold short and 35% of its free float on loan. This is a really significant portion of the stock, and as you can see, it's been maximum utilized for a long period of time, since about February of 2022. So AMC is currently in a good position to actually squeeze shorts because the days to cover have been growing. The volume is
Days to
increasing
cover.
only slightly, but the price action is moving to the upside, and shorts are now
It is.
in a
It looks pretty goddamn flat to me
net
on
neutral
this chart.
position. A little bit more price action to the upside, causing more shorts to get behind on their trades, could be enough to start enticing some of the bigger positions to begin covering their short trade and squeezing out the other institutions. Nothing is certain at this point, but I do want to point out that AMC
Nothing's ever certain.
met all of my triggers for a short squeeze to occur within 30 trading days since the time that I had actually analyzed this week of trading.
So
Consistently, what I have found is that stocks that are 100% utilized, meaning 100% of their lendable shares are currently held out for borrow, plus the short exempt ratio is greater than 3% for 3 or more consecutive trading days, plus 3 or more consecutive days of trading where the 5-day SMA delta rate is above 5%. That means that the stock's moving average is climbing at a rate of 5% every single day for 3 days or more. AMC had 4 of these days in a row, and the price is.
what about these down here? Boy, I see. It seems to be. It seems to. It's almost like oh yeah, it's negative. They're negative. What about the negative ones that came afterwards? Oh
Been
God.
stagnating sideways despite still high short volume. So this is actually quite bullish for AMC. Any shorts that are still in their positions may now be feeling some pressure and beginning to sweat. But we need to see at least another 5 to 10% gain per day for a solid week of trading for things
Well,
to
good
really
luck with
start
that.
moving against the shorts. I'm going to jump over to GameStop, which has seen quite a bit of decline in the trading today.
Oh,
GameStop, which was currently trading above its 5-minute 200 period moving average up until the very end of the trading day, got slammed down in the last 5 minutes. GameStop's daily chart has been filled with chop and indecision for at least the last several months. Since the beginning of September, it's been basically ranging in this range between $35 and $22, still hanging down below the $28 level. Excuse me. GameStop has set up a new area of support down here. Consistently, GameStop has not wanted to break down below this level of $23.25. It's been rather consistent about maintaining this floor. And since creating these lows in March and May 2022, GameStop has created a rising floor of support. It did have this one death spike candle that rebounded very quickly in the days that followed, with a big gap up on Thursday, November the 10th,
that was
setting
FTX.
GameStop's price up to a high of $25.70. I mentioned in a previous video that GameStop was actually setting up to squeeze if it was able to break $30. And there's actually a couple of folks, particularly S3 Partner CEO Bob Sloan, which stated publicly, I believe it was on a Bloomberg interview,
Oh
that
yeah.
he saw strong bullish momentum.
Remember that?
And if the stock were to break the $30 level, then it would be a candidate for a pretty spectacular short squeeze. This is the guy that we're talking about. Bob Sloan manages S3 Partners Fund. And specifically, what he is calling out is a sharp uptick in price, where shorts have been accumulating positions at these low levels and saw a really sharp climb in the price after GameStop dropped down to a low of $21.89 on the 9th of November. So I'm going to go ahead and analyze the Ortex data, which shows that there is a spectacular amount of short interest against GameStop. With a short score of 89.5, short interest percentage of free float is above 22.5%, and the percentage of the free float on loan is above 36%. Utilization on GameStop is 100%, and it has been at this level since February of
Yeah,
2022.
but
You'll
Ortex
notice that
itself,
both
Ortex himself or herself or itself said that's not what utilization means. It doesn't necessarily mean that, which I don't really understand how what else it could mean. But they're just saying that the demand is high. Oh yeah, LARP, true LARP. I mean, it sure seems like it. I've tried to go in with an open mind, objectively, um, as I always do. But yeah, short exempt volume. That's pretty egregious. Um, Using the Ortex data like this, short score, pretty egregious. Yeah,
GameStop and AMC have extremely similar levels of short interest versus its free float and similar dates when they became fully utilized. I do not for a second believe that this is coincidence. GameStop and AMC are both linked together by the same cause and by the same level of conviction from retail
they're
investors
linked together
who have
because shit companies.
been feeling tremendous amounts
That's
of
the
pain
link.
over the last 2
They're both
years
shitty
while dealing
companies
with this corrupt market and
on the
trying to
decline.
scratch out
That's
a
all it
winning trade
is.
out of this highly manipulated market. Over the
Oh,
last several
Jesus.
months, the days to cover have been steadily rising on GameStop, just
Yeah,
like
because the
AMC,
volume
and on a
has basically
3-month
gone to
average
zero.
of days to cover is above 18.9 days. Both of these stocks show extremely little availability according to Interactive Brokers' short share availability chart. And further to this point, we've seen steadily
I
growing.
mean, I love that right there. Interactive brokers, short shares. I mean, you can get that data for free. I don't know why you'd need Ortex to show you that. But IBKR availability 10,000. Doesn't that directly contradict you 100% utilization? I don't know. Why do they have this here? That's kind of ridiculous
Brokers' short share
to me.
availability chart. And further to this point, we've seen steadily growing levels of shares sold short on GameStop's short interest position changes on a month-over-month basis. We saw an
Sort of, maybe
incredible
a little
surge
bit.
of short interest take place right at around $35 on GameStop starting on July the 22nd. GameStop popped shortly after that and then was driven further down by even more short interest.
But how did
From
it
this point
pop
forward,
if it experienced a sharp increase in short interest?
$35 on GameStop. Incredible
Okay, listen.
surge of short on a month-over-month basis. We saw an incredible surge of short interest take place right at around $35 on GameStop starting on July the 22nd. GameStop popped shortly after that and then was
Okay.
driven further down by even more short interest.
How did it pop if the shorts control the price the way that they believe that the apes believe that they do? If experienced a surge in short interest and then the stock went up and then there was more short interest and it went down. Like, okay.
From this point forward, the
What are we
average days shown in the light blue line have been climbing, indicating that shorts have been holding onto their positions and adding new positions as the
Ah,
stock has ticked downward.
or you could look at the other part of the fraction that that comprises days to cover, the trading volume.
But since hitting this floor with a minimum of $23, GameStop has been unable to break down any further, and shorts that have been holding their positions are starting to suffer from a higher and higher cost to borrow rate. So those shorts who have been in this
What,
position for
10%? 10% per year of what? How much? What's the price? I don't even know what the price is. $25. Oh wow, breaking
extended
the
period of
bank.
time are starting to feel some pain from the number of short borrow fees. By itself, however, this is not likely to be enough to catalyze shorts to cover their positions. So why is the $30 level so significant? Well, it's because of Gamma. The Gamma ramp chart in front of
Oh my
you,
God.
generated by Hell's Trading Floor's proprietary Scourge bot, shows
So this is proprietary. No wonder it's dumb.
that more than 40% of GameStop's float would be in the money on the options chain
That means nothing. That means nothing.
for calls if the price were to extend past $70. Starting at just $30, GameStop goes from 5.9% of its float in the money all the way up to 15%. And every $10 mark brings up another 5 to 10% of its float in the money as the price.
There's a reason that nobody has ever talked about this before, because it's meaningless, basically. Yeah, squeeze at 30. That's what they said last month. Okay, BBIG.
Short
I,
shares. Next, I'm going
wait a minute. Oh, I want to hear the. I want to hear the.
we haven't consistently seen it happen 3 consecutive days in a row. Kind of pressure on shorts. Very similarly to AMC's short exempt data, GameStop has also had multiple days above 3% short exempt ratio, but we haven't consistently seen it happen
the days when the volume is the highest. Huh. Weird.
3 consecutive days in a row. In addition, the 5-day SMA delta rate, or the rate of change on the 5-day simple moving average, has not exceeded my 5% rate of climb any day in the last 30 days. So this is not a good case for GameStop, because in order for it to actually put pressure on shorts, the price needs to be moving in an upward direction already as they're continuously piling more money into their short bets. For shorts to truly lose control, GameStop must break the $30 level and keep going in order to start scaring them out of their positions, and for bulls to get more confident putting their money on the long side of the trade, pushing shorts out and starving them of precious little supply of short shares. Next, I'm going to move on to
really
Ventures.
Florid language. Okay, I've had, well, I guess I did want to look maybe at this BBI. This is just for fun. I mean,
next I'm going to move on to, it's been in a while off significantly, creating this descending wedge that I've been calling out for months now. It broke it and held outside of this wedge and has been maintaining a floor at just under.
He forgot to mention apes are broke. So I love it. I love when they say, "Oh, if it gets above $8, it's really gonna take off." Why? Why? Anyway. Usually it's once it gets under $10, watch out. Retail investors are gonna start snatching up the shares. Oh, hedgies, push it below $10. I dare you to. We're all gonna buy it. That did not work out.
67 cents. BBIG now has confirmed, or at least appear to have confirmed, a bounce at this level.
Wow.
What I would like to see is for BBIG to continue moving and recapture this level of resistance here at 85 cents.
2 days ain't a bounce, because you had 2 green candles here, and what happened? 2 green candles here, and what happened? 2 green candles here, and what happened? So no, that's invalid.
BBIG can maintain this level and hold it consistently for another solid week of trading, then 2 possibilities. We can either confirm a double bottom.
This guy, his presentation is better than a lot of their presentations are. And he sounds like he knows what he's talking about. It sounds more legitimate, but it's doesn't seem to be at all. No mention of MMTLP with the MMAT squeeze. Okay. Let's get some bullish BBIG news in the coming weeks. When it hit 563, that was Ape's chance to run back to 72. No money. He's boring. Yeah, well, I agree with that too. He is boring. But that doesn't bother me so much. I can deal with that if what they're saying is not complete nonsense. Unfortunately. Okay. So then we have this article from Forbes from Thursday. Yeah, Thursday. Halloween. Thanksgiving. AMC stock breakdown. Is this meme stock a financial winner? Is this meme stock a financial winner?
AMC stock breakdown. Is this meme stock a financial winner?
Key takeaways. AMC became a popular investment as a meme stock, resulting in incredible volatility. There are signs AMC is on the right path, with people returning to movie theaters and the company earning more per patron than before the pandemic. AMC has many obstacles to overcome, specifically the rise in streaming popularity. Okay. Should you invest your hard-earned money in AMC, or is that time past? Slid to under $8. Let's see. Millennials, hedge funds shorted AMC stock. This means the hedge fund made an investment that makes money when the stock loses value. These funds believed that AMC shares were trading for more than the company was worth. When retail investors pushed the stock higher, hedge funds that made the investment for a lower stock price had to purchase shares to cover their short position, resulting in losses. Well, I mean, that's not what the SEC report said, actually. It really kind of said there was no squeeze, but anyway, whatever. That's the popular, hey, if it's what people believe, it must be true. Aron has publicly thanked retail shareholders for saving the company as it delivered $2.2 billion in equity. Wow. So I don't want to hear the apes talk about all these hit pieces. I mean, there's a typo right there. AMC stock outlew. Outlew. What is that, like an outhouse in Europe, in Italy? I have to go to the outlew. Where's the outlew? It's evident that AMC stock's taken a beating, but that only tells part of the story. Okay. Attendance is returning. Another positive sign for AMC is higher ticket prices. AMC saw an increase in the amount people spend on concessions. In the first 9 months of 2019, the average F&B revenue per patron was $486 compared to $649 for the same period in 2022. Gee, I wonder why. I mean, who cares about revenue per patron? What about profit per patron? I mean, all of this stuff they're saying, all of this stuff. And guess what? AMC can't make a profit. They're losing money. So I don't know, but now this is from an AI apparently. Q.ai, powering a personal wealth movement. I don't know if an actual AI wrote it or what, but let's see what the voices say here. I think it's important to add that the quote funds still have not covered their short positions yet, and many are still in the red with the stock trading around $7. Citation source needed there. It would take short sellers over 6 days to cover a current volume if and when they do. Well, the fallacy there is that would add to the trading volume, which would lower the days to cover. So that's also dumb. This article points out that the short thesis is dead and signals a turning point for shorts to begin the covering process. Yeah, because they're reading Forbes to find out when to cover their shorts. No. Media keeps omitting the fact that the stock was heavily shorted and 70% of the buying, 70% plus of buying power is routed off exchange and selling us IOU or fake shares to suppress price while using tokenized stocks held at FTX to keep cost to borrow low. No, there's no evidence for that. And routed off exchange, okay, but that doesn't change anything. Selling us IOU or fake shares to suppress price, no evidence for that. You just don't understand short selling. Tokenized stocks held at FTX, I think we pretty much showed that no, they don't have tokenized stocks for AMC or GameStop. They don't. Now there might be some fake ass coin tokens out there that are called AMC, whatever, but those aren't tokenized stocks. Those are Ethereum tokens. So no, this is just all wrong. Okay. market opens in 5 minutes. I don't know if we can squeeze something in here. Massive Amazon token ring crypto scam. Not token ring, token crypto scam.
Amazon scam that is currently going on. There is a massive Amazon scam that is currently going on, and people are losing millions of dollars. So someone
Oh,
has to do
shit.
something about it, and that's why I'm making this video. We need to act today on this because a lot of people are losing a lot of money. If you
Okay.
go ahead and look on
But what about people losing money on AMC? Okay.
a lot of crypto YouTubers' channels, mine included, you'll notice there's a number of different comments in the
I
comment section.
gotta not
And
stop
as
it.
you
I'm
can
gonna
see
run
right
out of
here,
time.
this is one thing that is referenced quite a bit. These spam bots come in and just comment this same regurgitated, copy pasted
Yep,
comment
I've seen
over and
that.
over again on pretty much all of my videos now, and it says this. New week up as many FOMO in, but the AMZ 22TX story isn't over yet. The only strat that works under all circumstances is DCA all the time with solid large companies, not hyped ones. And you can see there are just quite literally like thousands of these comments on just one of my videos alone. And I've actually been getting a lot of DMs about this from my actual fan base talking about it. Because when you go ahead and actually search up this coin, it'll lead you to a video such as this one right here, where they hired a paid actor who they went ahead and got off of Fiverr to go ahead and basically try and shill you this coin. If we go ahead and look right here, we can see that they actually put the spam comments in their own comment section as well, but they actually have an account that they bought that's verified with 104,000 subscribers on YouTube. Now, obviously, we need to mass report this channel first and foremost. This channel should not be on YouTube because it is scamming and losing people millions of dollars. And just if you go ahead and look at the channel,
Well, if that's gonna be our measuring stick, then absolutely the AMC grifter influencers should not be on YouTube. If what he says, holds any
verified with
validity.
104,000 subscribers on YouTube. Now, obviously, we need to mass report this channel first and foremost. This channel should not be on YouTube because it is scamming and losing people millions of dollars.
Scamming and losing people millions of dollars. Where have I seen that
And just if
before?
you go ahead and look at the channel itself, like they'll actually try to make it look actually legit by getting the actual coin market cap channel's videos featured on it. But you might have noticed it says coin market cap news here, and this is actually coin market cap. So this is how they're fooling a lot of people. But if you go to their actual videos itself, you can see it's all their scam Amazon token, right? But obviously this is working because you can see this channel has been around for a very long time. You can see it's been uploading these videos for
All right, sorry, dude, but I don't care. Okay, so let's switch over to the Thinkorswim platform, and yeah, real quickly, we're looking at the futures contracts here. Market opens at 6 p.m. and I don't have these labeled, but basically in the first column here, we have equities, stocks. So the NASDAQ futures. Below that here, the S&P 500 futures, and below that are the Dow Jones Industrial futures. So the first column is stocks. Middle column is energy. So we have crude oil at the top, natural gas in the middle here, and gasoline, RBOB, at the bottom. And the right side is sort of indicators and other things. So the VIX futures, volatility index futures, at the top. In the middle are the bonds, 10-year notes, 10-year notes. And at the bottom is the dollar index, DXY. So that's the way I've got this set up. So it looks like we're open and we gap down. So the S&P closed at 40.34-ish. And we gap down to like 40.22. See a natural gas gap up. Dollar gap up. We're seeing the VIX rise as well. Makes sense. So we don't necessarily know. Well, let me rephrase. This doesn't necessarily mean anything. This may not be useful at all. That's the disclaimer. Because there's a lot of time between now and 9:30 tomorrow morning and beyond. So anything that happens now could be completely negated, undone or doubled or erased or whatever between now and when the market opens. So it's not necessarily a prediction. However, we can get a sense of where the sentiment might be on Sunday night, especially after a holiday weekend. And I knew Monday morning, Sunday night, Monday morning would come so quickly because it always does on these weekends. But yeah, so that's what we're looking at here. We're not trying to make any predictions or say, oh, it gapped down, so it's going to go down next week. We're not saying that. It might. I kind of think it I kind of think it will, but you know, I've been wrong. I am usually wrong. So we'll come back to this. We'll let this simmer here. Come back to it. We'll check it out. And we'll compare and see, okay, what is a relative strength, for lack of a better word, between the three stock indexes here. In other words, is the Dow leading the losses? Is the NASDAQ leading the losses? We might be able to tell something from that, and so on. So there we go. Anyone who buys it deserves to lose money. Looks like a scam. Looks like a scam indeed. Okay. So switching back here. The state of the meme market, yeah. But we did have some new videos. Looks like new videos pop up here. We got the TMI. We got, my God. Disney buys AMC. I have to.
So here it is, Thursday night. The sun is setting. You probably can't see it, but way out there is Mount St.
I don't know where
Helens.
Lou is. Maybe he got arrested finally.
When I was a little kid, that mountain blew up. That volcano blew up. And everybody, they had scientists there and they were monitoring it. And who would have believed a mountain that was just like any other mountain, just sitting there, would blow up like that? And here we are.
Well, if it was a volcano,
Thursday, June 3rd.
not that surprising.
2021, and with any luck, AMC stock is going to blow up, and we will become hopeful.
Wait a minute. What?
Thursday, June 3rd, and here that was just like any other mountain, just sitting there, would blow up like that. And here we are. Thursday, June 3rd, 2021, and with any luck, AMC stock is going to blow up.
It already did blow up.
Hopefully millionaires, if not thousandaires. We'll take that. We'll take 6 figures in cash. We don't know what's going to happen. We just know that it's a possibility. We've already seen this thing go up, what, $30?
Yeah.
$30, $20.
I mean, shouldn't that be an indication?
In minutes. And if you have enough shares, that adds up. So, and once that starts happening, people jump on it and it just feeds it until all the hedge fund managers that sold it short are forced to buy their stock back, forced to do it.
That's called a pump and dump.
The price. And that's why people talk crazy, like $100,000 a share. Will it get there? We don't think so, because that just seems insane. It could happen. We'll be happy with $1,000 a share. And if we can get out,
about 72,
and keep a little bit in and maybe cash in on those 6-figure amounts, but we'll see. But anyway, baby, I love you. If this happens, it's going to be amazing. But we'll see. And there it is.
Oh my gosh.
June 3rd. You have your phone?
No, they haven't.
Oh, well, anyway.
Okay.
All right.
65 to 5. Apple Podcasts.
This is just the podcast. I'm posting it on YouTube as well, in case for the people that have never heard it or tried to just make it easy if they want to hear one episode. But normally it's just on Apple Music. It's free. It had come out a few months before, and people were kind of dogging it at this point. It was like at $20, and I had a Roth IRA, mostly with mutual funds, but I had $1,000 of cash sitting in that Roth IRA, and I thought, you know what? I'm going to take $600 of that $1,000 because I didn't want to invest all of it. That would be reckless, right? And I bought $600 worth of Facebook stock, and it got me 30 shares at about $20 a share. And of course, a year later, that Facebook stock had doubled. And my wife said, you should buy more Facebook stock. And of course, it collapsed after the release of Ape. And there's hope now, though, a little bit. You're starting to see all these rumors about Amazon and, Disney possibly.
Those companies are profitable. Why would they want to ruin that?
For another year. So I'll be doing some more podcasts. Now, let me introduce myself. My name is Russell Corey. I'm a writer, filmmaker. I used to work for Disney for 2002 to 2015. What? We started a family, my wife and I, and so we moved to Oregon. So I had to leave Disney for that. I would love to have stayed working for Disney, but Southern California was too expensive for us to buy a home in, and also the public schools weren't so great. So we moved to Oregon to be closer to my wife's family, and we could afford to buy a house and send our kids to public school. And so far, that's worked out. But I'm kind of a Ralph Cramden. I always have these great ideas, and most of the time, they always fail. But when
welcome to the club. It's called being human.
If you ever seen the movie Chinatown, I used to watch him. He would be on before Matt Kohrs, and then when Matt Kohrs would come on, he would, be like, all right, well, I'm signing off because everyone's going to go watch Matt Kohrs. So it's been fun to watch him grow. But I know what it's like, with these YouTubers and being recognized. I'll go and sign up for it. This can't keep going on forever. I don't want to have this size of a position on AMC for the next 2 years waiting for the MOAS to happen. So, we're going to do the best we can. I hope it does. I hope it goes up and rips faces off. Let's see. As far as
myself
channel,
to introduce
I still have a few ideas on. So it feels special to be a part of that and connect with, give to the people that are positive and supportive. A piece of why they can't do
positive and supportive. Nope. Okay. China's energy sector. We watched that first, but right. Welcome to life. Welcome to life. The creative investor says AMC will likely rally 100% this week. 100%, right? 100%. 100%.
Any sign of strength with the stock, and that is why AMC can and likely will rally 100% or more in this upcoming week. At the very least, over the next couple of weeks. Well, that's what we're going to talk about here in this video.
Well, okay.
Statistically and historically speaking, in 2022, every time this has happened, AMC has rallied to that same extent. Maybe
I need to smoke some. Apparently, I need to smoke weed before listening to this guy. Maybe then he would make sense.
This time will be larger. Maybe it might be a little
Just
smaller.
kidding.
But on average, you're talking about a 100% rally. And that could mean some big dollar hollers for the AMC investor. Now, let's get into this video. The only thing that I ask you to turn, take a look at the ortex data.
Yeah,
We can
well,
see 20
okay. Ortex, that is a loser. Ortex has not made a single goddamn difference. Bit of difference ever in this. Never, not once did anybody say, all right, here's the Ortex update, da 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 da. It looks like it's going to squeeze Monday, and then it squoze Monday. Not once. It has been completely the opposite of useful. Okay, so that to me is nothing burger with extra mayo.
100%. I'm trying to be a little bit more conservative here and just go off of the numbers that we have seen already play out multiple times in 2022. And that technical indicator is likely no surprise to a lot of you guys, but it is the 50-day moving average. And we have seen this 100% rally after a break of the 50-day moving average 2 times in 2022. Really, both of these large rallies.
Okay. 50-day, huh? All right. Sure. Got to turn it on. Oh, right. Okay, here. 50-day moving average. Okay. And here. 50-day moving average. Okay. And obviously back here. 50-day moving average. Boy, this time though, I mean, yeah, it closed above it. It did, but I don't know. I'm just off the top of my head here. Every other time it did this, you had pretty much a rally, extended rally. In other words, green candles in a row. Here, in other words, not once when it actually broke above it and stayed like here, same thing. Back here, a little different, but I mean, still you have the streak of candles, green candles. Not once when the candles that were above it were red, did it actually materialize. In fact, every time that it did, here's one right here, it popped back down over here even. So I don't think this is valid, at least in terms of what he's saying, for the reasons he's saying. Maybe I'm wrong. Let's find out.
Rallies was followed from a break of the 50-day moving average. And if we take a look at the actual percentage moves that we did see back here, and I'm calculating just from the break of the 50-day moving average, not the rally from the lows.
Yeah, I mean, you can tell even on his chart. Does this look like this over here? Does it look the same? Not really.
Just from the break, you've seen 100% rally back here, and that was obviously in March of 2022. And then back here from the break of the 50-day moving average, just back here in August, from the break of the 50-day until the peak, you rallied 112.5%.
So both of these points, both of these points here, and this is actually a pretty interesting point here. Okay, pen. The orange line is the S&P 500. So this is a big short covering rally. So is this. The whole market did this. Also here. Pretty much every time, also here. Pretty much every time that it pops up, it's you know, it's just staying in step with the market. Curiously, though, this last time, this last rally in the SPY here, I mean, yeah, you did see it here, but not to the same degree at all, really. So there's also that. But they never talk about this. Now, I would love for him to prove me wrong.
Seen that break of the 50-day moving average. Sometimes it happens quicker. Sometimes it takes a while. Like we see back in March, you broke the 50-day moving average.
Yeah, but it was an extended trend.
Trading rallied 100%. Back here in August, you broke the 50-day, went up. I believe this was about 40%. Let's go ahead and see. Yep, about exactly 40%. I'm good, man. Exactly a 40%
Oh yeah,
rally
you're really
from the
good.
break of the 50-day. Came back
God.
down, so you were only up about 7% at that point. And then that's when you continue to rally and hit those peaks at about 112% from the initial break. But from the
Who
initial
cares?
break, that was July 7th. You didn't actually see the peak until August 8th. So it was about 1 month from the actual break of the 50-day. We held the 50-day, and then we saw that big rally. Now, based off of what I'm seeing here, it looks to be, if you just divide the averages here, it's probably going to be about 2 weeks. Probably going to be roughly in that time frame. And as you can see, we've already been above the 50-day moving average. 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days now. So if you're talking 14 trading days,
yeah, but the 50-day moving average is continuing to go down. The 50-day average is continuing to decline.
it would be less than that, right? Because we're not open 7 days of the week to trade the markets. You would be looking at that 100% move coming this week, and that's where my kind of statistical probability is in my mind, and that's what I'm trying to express to you guys. Is not that this is a guarantee, but statistically speaking, there's a greater chance than not that we could rally about 100%. And that's why I like to talk about.
Yeah, right. Okay, so what if you're wrong? What happens if you're wrong?
Really,
nothing.
Or I
Just
should
say it
those
again
are
next
really
week.
my thoughts on what the situation is. If we do go ahead and take a look at some of the Stonko tracker data, some of the other factors that I think are important, and unfortunately Stonko tracker is still not updating these numbers, but last we knew, December 16th, that's going to be the next big option expiration. You had about 130,000.
Because they haven't settled yet. Because they haven't settled
that
yet.
Were out of the money and about 20,000 calls that were in the money. These numbers are not accurate what we are currently seeing, but for the next 2 weeks, you don't have anything crazy as far as option activity, and that can actually set you up for some pretty big moves as well. Some of the bigger moves that we have gotten this year have not been on large option expirations. It's actually been on small option expirations because there's not a lot of that initial hedging from market makers, right? When market makers, or I should say, when you go out and buy calls,
here we go,
do option trades in general, the market makers are taking the back ends of those trades about 90% of the time. So when you're seeing a lot of calls that, you know, are sitting on the option chain, or a lot of puts for that matter, just in general, there's a lot of that pre-hedging already happening. If there's not a lot of option activity, then if you see
how are
an
they hedging
organic
it?
move to the
You tell
upside,
me.
you will see let's just call it organic hedging to the upside as well, and that can help fuel you to
maybe
upside, guys. So
probably not.
That is pretty much it for
on
this
meme
video.
stocks.
Volume was really low
good.
last week.
Oh God. Okay. Let's see. We have this guy. We have this guy here.
Hey guys, I never talked about this because, well, I never thought I had a shot being such a small channel. And honestly, I still can't talk about what's going on because what's going on came with contracts, which included an NDA. But it looks like I'm going to get an opportunity to pitch our favorite stock to a much larger audience, an audience with millions of followers, a channel with millions of followers. I can't tell you what's going on, but I'll keep you posted, and keep looking for a link on this channel or a channel with a lot more subscribers.
Oh, so he's following the owl.
Wish me luck, and when it comes time, vote for me.
Mr. B. Oh, okay. Mr. Beast. I was going to say Rogan, but then I actually read what was on the screen. Yay. Sweet. Great. Okay, popping back over here. So let's see. We see the dollar is holding at this higher. Well, I mean, it's not that much higher, but it's about 20 cents higher. So it's hanging out up there. So is natural gas. Stocks are clawing back a little bit. All right, we'll come back. Wake me up when the market crashes. Wake me up.
What is up, everybody? My name is Darren, and welcome to Stock Mafia. Now, you got to pardon my voice. This got this seasonal cold going on, but we are going to get into it anyway, because it's been a few days since I've talked to everybody. This video right here is meant for everybody to feel better. We know what has been happening.
So hopium. Sweet, I need a shot.
We know that our play has been heavily shorted and manipulated. And we know that our stock price is not reflecting the real price, whether that's dark pools, synthetic shares,
God,
whatever's going on, paid off politicians. I mean, this.
How long until these idiots get flushed down? Really?
This play has got.
But then I don't have a channel. I actually have to, stop writing the momentum of these idiots. So never mind. Actually, Moass is coming.
Everything going on. It's its own movie within a movie that's shorting a movie theater stock and a video game stock.
It's not a movie, though.
Now,
you're not in a movie.
We all know the narrative to put the movie theaters out of business. Now, if you guys understand this has happened numerous times.
No. Just no. Just no. Okay, this would be a good point to bring this in, probably. So I hinted at this yesterday. I showed this actually. This is the abstract for this research, talking about short selling, banning short selling. So we watched a video by somebody. Oh yeah, the stock and crypto plays guy with cool glasses. And I think it was him. No, it was Thomas James. Sorry, Thomas James, Squinty. Where he was reading tweets like he always does, and it was talking about they want to ban short selling on AMC. They want to ban short selling on AMC, and I said, well, that's stupid because short selling, banning short selling does not stop prices from going down. And we looked at this abstract here. We can look at the actual research. So basically, I'm not going to go through this whole thing. I put a link to the description if anybody's interested, or put it in the chat if you want to check it out. But it is from the New York Fed. In 2008, regulators banned the short selling of financial stocks, fearing that the practice was helping to drive the steep drop in prices during the crisis. However, a new look at the effects of such restrictions challenges the notion that short sales exacerbate market downturns in this way. The 2008 ban on short sales failed to slow the decline in the price of financial stocks. In fact, prices fell markedly over the 2 weeks in which the ban was in effect and stabilized once it was lifted. Similarly, following the downgrade of U.S. sovereign credit in 2011, another notable period of market stress, stocks subject to short selling restrictions performed worse than stocks free of such restrictions. So I'm going to kind of skip around here a little bit. It goes through what is short selling. Okay. We know that it's the selling of borrowed shares by investors who expect to cover the positions later by repurchasing the shares at a lower price. Because of the profit opportunities it presents, it's a common practice. Now, these one researchers here showed that during 2005, it accounted for about 24% of trading volume on the New York Stock Exchange and 31% on the NASDAQ. Let's see. Now, we are going to skip down here. Talks about the interest rate, collateral, right? From a long run perspective, stocks that are overpriced relative to their fundamental values present a problem for the economy. The market will eventually correct the mispricing, but in the meantime, real resources may flow to the overpriced stock of industry. And while stocks are liquid financial instruments, the investments in the mispriced firm or industry may not be so liquid, leading to long-term disruptions in the real economy long after the stock price is corrected. For example, consider the new technology firms that were caught at the end of the dot-com bubble. While it only took a short time for the market to correct what were, in retrospect, overpriced technology stocks, the employees, customers, suppliers, and lenders associated with those firms took much longer to react, recover, and return to productivity. In much the same way, an artificially underpriced stock sends a distorted signal to investors. Capital gets directed toward other investments when it could have been put to better use at the undervalued firm or industry. Accordingly, regulators and economists generally agree that it is good for short selling to depress stock prices if the stocks are overvalued, but bad if the short selling pushes stock prices below fundamental value. Okay, so it's good if it depresses stock prices that are already overvalued. It's not so good if it pushes prices below their actual fundamental value. Short sellers claim that by identifying overvalued stocks and correcting the mispricing, they provide a valuable service to investors. For example, in his testimony before the House Committee on Energy and Commerce in 2002, short seller Jim Chanos, a private investment, reported that his firm looked for companies that appeared to have materially overstated earnings, that had been victims of a flawed business plan, or that had been engaged in outright fraud. Okay, so this is Jim Chanos. Well, I guess I can't do that. Jim Chanos. His company looks for companies that appear to have materially overstated their earnings, they've been victims of a flawed business plan, or they've engaged in outright fraud. Chanos testified that months before Enron's collapse, he began shorting the firm's stock because of the suspicious gain on sale accounting, cryptic disclosure of third related party transactions, and an apparent return on investments that was less than the firm's cost of capital. Despite concerns that short selling can artificially drive prices below fundamental values, it is not easy for investors to make money in this way. Short sales may depress stock prices, but the short seller profits only after buying back the shares at low prices close the position. If purchases and sales have a symmetric impact, such that a sale of shares moves prices down by about the same amount as a purchase of the same number of shares would raise prices, prices will rise back to their original levels when the short seller buys back the shares. In that case, the short seller will not profit from this strategy and will instead lose money on trading costs. And I thought this was very interesting because, okay, if purchases and sales have a symmetric impact, which may or may not be true all the time, but assuming they do, a sale of shares moves prices down by about the same amount that a purchase of the same number of shares moves prices up, right? When the shorts hover, when short sellers close their positions, buy back the shares, return them, prices theoretically would rise back to their original levels. So if you short 1,000 shares and then buy back 1,000 shares, the net effect is effectively zero. So what does it make? How does it work? How does it make sense? Why would anybody do it? Well, the point is, right, the price would already be declining. The price is already going down because of fraud, because of overstated earnings, because of flawed business plans, because of pandemics, or what have you. So short selling in and of itself, all selling would have an impact on the price of a stock, right? But back over here, it's only 24% of trading. This is in 2005, though, so take that with a grain of salt. What I'm saying is, it depends on actual selling taking place and the stock price going down. Otherwise, there's no point. When they buy back the shares, it will take the price back up to where it was, and short sellers would actually lose money because they still had to borrow those shares. They had to pay for that, and they tied up their collateral. Let's see, and that's about it right there. So then they talk about the 2008 deal. Um, So Baber and Pagano, these researchers, found that U.S. financial stocks generated positive abnormal returns relative to the market during the short sale ban, a result consistent with the argument that the bans keep stock prices from declining. However, they note that this effect may be due to legislative efforts intended to support U.S. financial institutions, such as the Troubled Asset Relief Program, TARP. Yeah, you think? Consistent with this assertion, they find that for countries where short selling bans were not accompanied by legislative efforts of this kind, the excess returns generated by the stocks subject to short sale bans were similar to the returns generated by the stocks that were free of bans. The authors conclude that the imposition of short sale bans in 2008 and 9 was, quote, at best neutral in its effects on stock prices. At best neutral. So this is an equal weighted cumulative return chart for U.S. stocks from August 1st to October 31st, 2008. And we can see here where the short sale ban was in effect between these two dotted lines. And what are we looking at here? We're looking at chart 1. In the days preceding the September 19th ban, the prices of financial stocks were under stress. They were under stress. So this is down 10%. That's what we're seeing here. The large negative return on September 15th occurred the day that Lehman Brothers filed for Chapter 11 protection. September 15th, right here, Lehman Brothers. Subsequently, there were large positive returns on Thursday, the day before the ban was imposed, and Monday, the first trading day following the ban. Nevertheless, other developments might have buoyed returns. Moreover, despite the large positive returns associated with the initiation of the short sale ban, the prices of financial stocks fell more than 12% over the 14 days during which the ban was in effect. Shortly after the ban was lifted, however, the prices of the financial stocks stabilized. Okay. Costs of short selling bans. The equity markets provide telling evidence of the costs imposed by these bans. These researchers found that the 2008 short sale ban in the United States was associated with a 32 basis point increase on average in the relative effective bid-ask spread for the banned stocks. 32 basis point increase. For the 404 financial stocks that were subject to the ban, the increase in spreads represents an increase in liquidity costs of more than $600 million. And this does not include, this estimate does not include those from trades that would have occurred but did not because of the increased liquidity cost. Liquidity and opportunity costs associated with the bans were not confined to the United States. Okay. Options markets. Spreads were about 96 cents wider, 96 cents wider than before the ban. So this chart here shows the daily increase in trading costs paid by liquidity demanding investors in option markets during the ban. So this is in millions of dollars. So you're looking at, anywhere from 20 to 110 million dollars per day of unnecessary liquidity costs because of increased spreads, wider spreads due to an inefficient market that does not allow short selling. 110 million in inflated liquidity costs, and then together the inflated costs of liquidity attributable to the short sale ban in U.S. equity and option markets are estimated to exceed $1 billion. $1 billion. And it also ignores the lost gains from trades that would have been made had the bid-ask spreads been at or close to normal levels. It also ignores the costs imposed on other markets. For example, bond arbitrage. So the conclusion is essentially their research challenges the notion that banning short sales during market downturns limits share price declines. If anything, the ban seem to have the unwanted effects of raising trading costs, lowering market liquidity, and preventing short sellers from rooting out cases of fraud and earnings manipulation. Thus, while short sellers may bear bad news about companies' prospects, they do not appear to be driving price declines in markets. And of course, this has references here that linked at. I just dropped it in the chat. The author is a professor of finance at the University of Notre Dame, Mendoza College of Business. We also have a assistant vice president in the Federal Reserve of New York's Research and Statistics Group, and another professor of finance at the same Mendoza College of Business. So interesting. Yeah, interesting, I think. This came out in 2012, by the way. 2012. Let's get back to the hopium. We need that.
Over the years, and they still haven't beat them. VHS versus Betamax. Remember when the VHS tape came out? I do. When I was a kid, I remember my dad taking us to the rental place, and he's like, you can rent anything. And it's like 3 videos for $4.
What happened to Blockbuster, though?
I remember how excited I was and thought to myself, I'm never going to the movies again. But guess what? I did.
But you could have said, I'm never going to Blockbuster again. You would have been
right. Then it changed to DVD. It was higher quality. People will never go to the movies again. Then it was Blu-ray versus UHD.
I don't remember people saying that, though.
The higher quality. Why would anybody go to the movie?
Actually, I believe with VHS, home recordable VHS on a VCR, and maybe cassette as well, compact cassette tapes. The danger, the worry was actually from the industry that piracy would run rampant, that people would just copy cassette tapes and record albums onto cassette tapes from their friends and not buy it, or what have you. And that turned out not really to be the case. What? Model 3 dude? What did I do?
Again, you see where I'm getting here. So then you have Netflix. They start doing the mail order DVDs. That's how Netflix got started. You would get a subscription, and they would mail your DVD movies to your house, and then you would return them just like you return them to the rental stores. And then streaming. Digital renting through whatever cable company you had. Maybe it was Verizon, Comcast, whatever. But streaming never killed the movie theaters yet. And then Amazon comes along, and they have this Prime Video, and Netflix gets into streaming. Now we've got Paramount Plus, Peacock, Netflix, Disney Plus. They just keep popping out of the woodwork. But the one thing they don't understand is they need the movie theaters. And Amazon realized that before COVID-19. Jeff Bezos made his aspirations to own a movie theater chain way before COVID became a problem in this world. He made bids to buy out AMC and it just didn't work out for him. So then you start doing your background.
Oh yeah, of course, of course.
Wonder why he did.
But I mean, I'm not saying people didn't do it, but it didn't kill the record industry. That's all I'm saying. Of course, some people are going to do it. Some people are going to pirate anything. But you know, if if I remember correctly, reading about this, that was a concern of the record executives that it was going to kill their sales, and I don't believe it did. But yeah, I mean, I found some reel-to-reel tapes, reel-to-reel tapes, quarter-inch reel-to-reel tapes that my dad had recorded albums onto, and he actually he did have a reel-to-reel deck when I was growing up, so that was fun. Anyway, just trivia, I guess. But yeah, the mixtape, sure, but it didn't kill record sales. It didn't kill the record industry. Uh, I don't know if streaming did or not, but anyway, yeah. Or at least it wasn't enough of an impact, to not invest in artists and whatnot.
He didn't do that. Why he didn't go after AMC. Why he didn't put a bid in. They have the money. And his aspirations to be an Oscar-winning movie studio, they've always been there, and they're still there. But then the environment has changed.
Are we talking about movie production or movie exhibition? Because AMC doesn't make movies. They make movies better.
Why buy it when you can take it? Just like Toys R Us was taken.
Toys R Us was taken. Model 3 dude, I'm gonna have to defer to you on this one. I'm to be honest, I don't really know what happened with Toys R Us. Tell us. Can you tell us what happened with Toys R Us? We're gonna get the version of it from the ape version of it
But
here.
then the environment has changed. Why buy it when you can take it? Just like Toys R Us was taken. Through synthetic shares, eToys, KB Toys. Who benefited the most from when all these companies suspiciously went out of business?
Suspiciously went out of business. Yeah, I kind of thought you would object to that. Founded in 1957. Wow. Wait, how was... Okay, the first store was from 1948. The company itself was founded in 1957. Category killer. It's really too bad that you can't make a backwards R on the keyboard. Founded in Washington, D.C. Charles Lazarus. Is that the same proprietor of the Lazarus department store? Can't be. I mean, I don't think they're around anymore. Maybe not. I mean, I don't think Toys R Us. Toys did not change with the times. Too many chiefs. Not enough Indians. Okay, not the same Lazarus. Okay, they merged with Macy's and the name was retired. So this is Simon Lazarus. And it actually was, wow, it was founded in downtown Columbus, Ohio. So this Fred Lazarus. That's the name that have heard. This is Charles Lazarus or Simon and Fred Lazarus here. So I'm from Cincinnati, Ohio originally. That's where I grew up. And of course, we have Macy's there, the John Shillito Company, Shillito's department store when I was a wee lad. Federated department stores. Now, I don't know if Macy's is still based in Ohio. I guess they're headquartered in Atlanta now. But Kroger, the Kroger company for sure is, and Procter and Gamble. So there you go. But okay, so not the same Lazarus. They didn't change with the times. Bankruptcy. And when did you retire, Model 3 dude? I think it was, I can't remember. I can't remember what you've said. But they filed for Chapter 11 in 2017. Oh, and look at this. Stating the move would give it flexibility to deal with $5 billion in long-term debt. Where have we heard that before? $5 billion in long-term debt by borrowing $2 billion so it could pay suppliers for the upcoming holiday season. Oh, Mr. Lazarus was a great guy, very funny with strong ideas. I gotcha. I don't think they're related though. I mean, maybe they were, but
Firm to bounce at this.
oops. Because this was Charles P. Lazarus from Washington, D.C. So I think it's just a coincidence, just a, another Jewish merchant, basically. Wow, Charles Lazarus died one day before Toys R Us began liquidation sales in the United States? Really? That's crazy. Okay. But I'm going to stand by that it's coincidental. Okay, Model 3 was out by 2012. Okay. Okay. So getting back to this here. So Toys R Us had a $5 billion in long-term debt. It had been paying $400 million per year to service its debt, which prevented it from investing in improvements to in-store experiences to compete with Amazon and Walmart. To compete with those in-store experiences from Amazon, this really needs to be rewritten. Although the quote retail apocalypse was a factor, some analysts cited the rapid increase in debt occurred under its private equity ownership. Let's see. In 2018, January, the company announced it would liquidate and close up to 182 of its stores. All U.S. locations would be closed. In March of 2018, they received approval from the bankruptcy court to liquidate its stores. Canada. Liquidation sales began. June 29, 2018, Toys R Us permanently closed all of its remaining locations after 70 years of operation. Restructuring on all that stuff, and then pop-up stores that they have in Macy's and or whatever. Nothing in here. Well, I'll tell you what. Yeah, no mention of short sellers in here. And just, in reading that, it sounds like it might have been a good short trade, but although it says private equity ownership. Toys R Us is owned by Vornado Realty Trust. Became a publicly traded company in 1978. But Toys R Us was saddled with a hefty debt in 2005, leveraged buyout in which Bain Capital, KKR, and Vornado Realty Trust took the retailer private. So it literally could not have been short sellers because it wasn't publicly traded. Wow. So that was the beginning of the end, apparently. Yes, it was a very sad day when he died. I still say the death is his dream of a place where a kid could come to be a kid. Killed him. Yeah, that's sad and interesting. 1 second here. Okay. How was how were those Macy's Toys R Us's? Probably probably interesting to see, but so yeah, if anything, okay, if anything right now, the Toys R Us story is ominous for Twitter, right? Because it was under private equity ownership that Toys R Us went bankrupt. Elon Musk, well, anyway. So yeah, I mean that whole narrative of Toys R Us, bullshit. Bullshit. Complete bullshit. Yeah, Kroger's based in Cincinnati. P&G might be. They have a big plant there. Anyway,
I'll let you guys decide who benefited most.
I'm going to go back and I want to hear that again.
AMC. Why he didn't put a bid in? They have the money. And his aspirations to be an Oscar-winning movie studio, they've always been there, and they're still there. But then the environment has changed. Why buy it when you can take it? Just like Toys R Us was taken. Through synthetic shares, eToys, KB Toys. Who benefited the most from when all these companies suspiciously went out of business? I'll let you guys decide who benefited most.
Well, I mean,
so now the world.
I mean, I can't imagine coming on to YouTube or any platform or online or even just speaking it out loud to myself with like and having no clue I'm just going off of what I've read on Reddit or seen on other videos. I mean, you saw how long it took to like look this stuff up, and Model 3 dude is very helpful too because he's, you know, was former executive for that company. But I mean, it and it probably says right in here. Actually, it does. Excuse me. Public stock closed for the last time on July 21st, 2005. Okay, so I didn't even have to look it up separately. It's right there. What a clown.
Shuts down. And what companies are gone after? Well, they went after a video game store because digital movies are the new wave of the future, or digital video games. Digital movies are still streaming. Nobody's going to the movie theaters anymore. But instead of just shorting it and letting it recover on its own, nefarious acts happened. So here's the thing. The apes started fighting. And we started fighting for the stores that we love, the stores that we know.
Oh, come on.
Triple witching, T90, days to cover, 100% utilization, splits, preferred stock equities. Then GME does a 3-for-1, meaning they're going to give us 3 shares for every one. And then what do the brokerages do? They do a split of our stock. All of these things have happened.
Split?
And our price keeps going down, and we keep buying. Pre-pandemic, AMC was a $24 stock. Today, in my opinion, if things were on the up and up and the stock market worked the way it should and not the way it has, without manipulation, AMC, because they paid off so much debt, they've bought...
What? They've paid off so much debt. What are you talking about? Oh my God.
Theaters that have increased revenue, they're creating new revenue streams just with that.
Again, no, who cares about revenue? What's the margin? What's the profit margin? Are they making money? Are they losing money?
Momentum,
revenue, less important.
Potential and real revenue, it's probably a $50 stock.
What?
So what do I think the best buy in the market right now is? Not financial advice, but when I'm looking at the stock market, there's only one stock that I'm looking at. There's only one
Toys R
stock
Us.
that is way undervalued.
Toys R Us.
There's so many conspiracy theories about what has happened, who's doing this, who's doing that, but the writing is on the wall in terms of crypto exchanges dying, reverse repo.
What does that have to do with it?
The Fed
reverse repo? What does that have to do with anything? What is FT?
Rates, synthetic shares existing, and
hint, they don't.
Look at this recent tweet with Aron. He puts his head in the jaws of Jaws and mentions Bruce. And then Pixar just sends out another tweet mentioning Bruce. All these conspiracy theories, but all these things make sense. Something is coming. We all know it. We just have to keep fighting. I don't think it's this week, but as a lot of people have tried to put 2 and 2 together, I thought it was 11/22. Was it? Nothing happened. But for the people that do all these riddles, and I'm not one of them, I just kind of read them and try to understand them. They said 11/22 was positive. Something happened where Musk and Aron spoke or tweeted each other. Okay, I'll take it. I'll take anything I can hope for my investment and your investment to do better than what it is, and that our markets get fixed. And if they don't get fixed,
markets get
we should
fixed.
at least get paid. All right, everybody.
Lord.
Stay strong. Stay positive. I will see you on the next one.
Oh, I thought he was going to say on the moon. No. No. So he said it's a $50 stock. I'm sorry, but Citi Begs to differ. They say $1.10. $1.10 per share. Oof. Old habits die hard with walking stores. Yep. So they're talking about the proliferation of multiple streaming services. They're seeing downside risks to the global box office going forward. In addition, these recent industry developments suggest that the strategic role of exhibitors may be diminishing. That makes perfect sense, really. I mean, which makes it even more baffling as to why AMC would think that, oh yeah, let's get everybody together in the theater and have a Zoom conference with another group of people in another theater. And, you know, that's going to be the thing that saves us. I don't see it. We're moving to a non-physical, conception. The internet, essentially, information, non-physical, electronic, however you want to think about it, energy. That's the way the world has been going and probably will continue to go. And so that means that like large spaces, in a lot of cases, are less relevant than they used to be. Now, there still are some that are, I'm not saying that all sports stadiums, event venues, things like that. But if you can do it somewhere else and provide convenience and cut out a lot of costs, well, yeah, it makes sense and it's probably going to be adopted. I mean, you used to have, 20 something volumes, books, hardcover books of an encyclopedia. And it was, by the time you got it, it was already outdated. And then I remember when I got this, it changed the world for me. Then you had things like Microsoft Encarta, which came out in 93, I think it says 93. And so, it was on a CD-ROM. And it was basically, well, that was the first one I had. I mean, there were others as well. Rolliers. And then it got to the point where you don't even need physical media anymore. It comes through the internet connection. So that same with music. Yeah, people go see a band or perform, artist. Some people, will never stop doing that. It will always happen. But you don't even have to go to the record store or the music store or Best Buy. When I was growing up, they used to have so many CDs. It was amazing how many CDs they had, or Borders Books, or Barnes and Noble, one of those places. Camelot, Sam Goody, these types of stores are barely in existence. And you go into Best Buy and look at their CD collection, it's like, this isn't impressive at all because, yeah, nobody buys them. Yeah, some people still do, but by and large, it's not the preferred media. You don't need it. You don't need it anymore. If you want it, you can literally burn a CD of it. Okay, so going back to the futures here, let's see. Volatility is continually appears to be kind of making a run for it here, possibly. A lot of times we get these gap ups or gap downs and then pretty much flat for a while. So that's kind of, I guess, where we're at right now. I'm also not an expert or a financial advisor, so just noticing things here. Okay. We'll check out a couple more videos here. See what we got. We got Ape Father here.
You want me to tell you? You want me to tell you the truth, Mike? If I could have did it all over again, excuse me, a little sinuses here. If I could have did it all over again with AMC, I would have sold at the top and rebought at the bottom. But I didn't want to do that because I'm the Ape Father, and I felt like, what example would I be giving? What example would I be giving if I was selling?
Well,
looking back, I should have did that.
What example would you be giving? You would be giving a good example. That would have been a fantastic example. It was the best example you could have given.
I should have sold that shit at the top. I should have rebought, but that's hindsight. It's all hindsight. You know, I thought in June of 2021, we were all going to squeeze. I thought we were going to squeeze, man. Yeah. Just got a new job, got it for extra cash. Awesome. Congratulations, JC. I have to admit to you that these prices of AMC are very low. And I've been buying. I've been buying, but not a lot. I don't buy a lot with AMC. I buy like
I'm gonna bring in the no shit Sherlock comment for that. That's great.
These prices, I have to admit to you that these prices of AMC are very low. And I've been buying.
They're very low,
but not a lot. I don't buy a lot with AMC. I buy like, 50 shares. I'll buy 20 shares, 30 shares. I don't go crazy. Oh, thank you, Mike. God bless you. You're a good man for at least acknowledging. No, I admit the truth. Listen, I admit the truth to you. The wise thing would have done to sell and then to buy back at the low. But, I didn't want to set a bad example.
Or a bad example. How would it be a bad example? Making money is a bad example? Actually making a profit is a bad example. What is the logic there? How does that make any sense? And by the way, no. Sell at the top or as close to it as you can reasonably get, because nobody really catches the top or the bottom of anything. Some people do, but it's just luck. Nobody knows. And then move the fuck on to something else. That's really what should have happened. If everybody did that, well, we wouldn't be here talking about this. So I guess it's good that it did, because it brought us all together, man. But I mean, come on, dude.
I didn't, because, here I am preaching apes. I'm like, buy and hold. And then I'm going to sell? No, I couldn't do that. See, that's what John Wick Snippin did. John Wick Snippin, he was the one preaching AMC to everybody. And then he sold like a little, a little biatch, okay?
Little bitch.
And you know what? Now you might say, well, maybe he did the right thing. But the thing is, you got to pick one direction. You got to pick one direction. Like that band, the band One Direction?
Oh, God, shut up.
What you're doing. See, who I like a lot, believe it or not?
Scott
Frankie
Allen.
Muhammad.
Oh, my God.
Okay, I really have to say, and you could tell him I said this, I like Frankie Muhammad because he sticks to one vibe, which is buy and hold.
What, brain dead? He sticks to the brain dead vibe. I gotta say, I respect that. He sticks to one thing. Even if that thing is retarded, he sticks to it, boy. What?
We're fighting the hedge funds. We're fighting the corruption. And we don't want to be the left behinds. We want to be the winners. And the only way that we're going to be the winners is if we all stick together as one united family and we fight the hedge funds. I love that message. I love it. And I love Frankie Muhammad. The only time I had the problem one time with Frankie Muhammad was with that Ape Nation Will guy. That's it. Okay, that Ape Nation Will guy came out of nowhere, starts insulting me. For no reason. I had no idea this guy existed. I'll fly to Jersey, he says to me. Ape Nation Will. I'll fly to Jersey. I'll kick your ass. I said, all right. I said, you got to do what you got to do, Ape Nation Will. And next day he takes down all his videos. He erases all his videos. I'm like, okay. The guy's a character. But the thing is, Frankie Muhammad didn't acknowledge that Ape Nation Will said anything wrong, because him and Ape Nation Will did an interview the next day. So I said to Frankie, Frankie, don't you think you should acknowledge the guy says he wants to fly to New Jersey, right? And he wants to like attack. First of all, that'll never happen. Like,
DWAC is dead.
Okay, so I don't want to go there. And he knows what the bottom line is. Ape Nation Will.
Isn't
Okay,
it?
but the bottom line is this:
Oh, God.
Frankie Muhammad didn't take my side. Frankie Muhammad took Ape Nation Will's side. That Ape
Maybe
Nation
this
Will just came.
maybe this will be the time. Maybe this will be the time it does this. I'm not picking on you, Antoinette. I'm just, you know. There we go. You know what? No, there. That's more like it. Gap up every day. Reddit is spreading that rumor. God, Reddit spread some rumor. Reddit knows how to spread some rumors. It sure looks like well, let's see. What Reddit? AMC stock. I wanted to go over to AMC stock anyway because there's some ridiculous shit over here right now. Maybe not. Just another night supporting my favorite stock. Oh, okay. Yeah, drink some more beer. You'll be all right. Good Lord. Billy has spoken. Reverse repo has been going down. Oh. Reverse repo has been going down. Clearly, it means AMC is going to moon. Next bull run. Why are you worried about that now? Monday equals moon day. Maybe it's in the DWAC subreddit. DWAC. Trump snubbing Twitter in bid to save Truth Social, but insiders think he'll cave. Proved. Wow, this is not a very active subreddit. Last post was 1 day ago. Maybe it's DWAC stock. Nope. DWAC underscore stock. Of course. This is the one. 18, almost 19,000 members. That's it. Oh, I see this. Fourth day on Reg Show short. Fourth day on Reg Show. Short are struggling with the FTD. Keep the buying pressure. No. Probably not. Can't wait for DWAC Truth Social to cover all the hearings when the Bidens, FBI, and the DOJ start receiving subpoenas to appear in court. What about Cheeto? So here's a thought. What if DWAC squeeze will be the catalyst for the big crash? Oh yeah, that's an original thought. This will provide hedge funds and the media with the plausible deniability to cover their own tracks whilst blaming Trump once again. From Elmer Fudd, literally someone named Elmer Fudd. Anybody still think Elon is on our side? On our side, who is the our? Beta testing Truth Social DMs. Truth Social will be launching its direct message feature function soon. Wow, they're breaking all kinds of ground with this. Oh my God, they have private messaging? Holy shit. We need to unfollow Trump at Twitter. Kanye is on Truth. This past week, Kanye West called me to have. Not even going to do that. Yeah, okay, sure, whatever. Elon is buying DWAC. You're going to have to find that for me. I can't find it. Third day on Reg Show, and it means 7 consecutive settlement day of high FTD level. 6 more days to trigger the FTD buyback. Wow, these people are clueless. It doesn't say anything about a buyback in there. Come on. Crazy. These people are crazy. But you know what? The stock exchanges, the brokers, the market maker, all the people that are actually making money from all this trading, they love it. They love uninformed retail investors. Absolutely. So if you want to get, if you hate hedge funds and market makers and the stock exchanges and Wall Street in general, if you don't like them, which I don't like them, I don't like Wall Street. Wall Street sucks. The best way to do it, the best way to act out your hatred is to actually educate yourself and stop handing over your money so easily on worthless stocks that go nowhere. That's the best way to fight Wall Street, in my opinion. Stop giving them your fucking money. That's all they care about anyway. So we only have it up to October 10th. At least on this disclosure. Yeah, looks like a nothing burger. Because all this is FTDs being closed out. When the bars go down, that means they've closed them out. So it's nothing. It's literally nothing. And why didn't they all get up in arms about this? Well, because it wasn't the first trading day, I guess, but on the 10th trading day, there were almost 2 million FTDs. Oh my God. What about the short exempt volume? Where is it? Maybe it's in exchange. Maybe they don't even keep track of it. Well, gotta be over here. Maybe not. Maybe not. Oh, okay. Short volumes, PWAC. Like I like it really, you know, it's baffling to me how nobody seemingly can put this together. Like, oh, okay, so the short volume shot up on what day was this? October 8th, November 8th, 7th and 8th. The short volume shot up, but so did the price. Like, how does that make sense? If you because short volume is retail buying. So we don't have short exempt volume on here either because it doesn't matter. We could get just a short volume on here. Actually, we can do it as a comparison, and then we can see that and you know what, fuck this 50-day average. So I mean, you can't make this shit up. Like, every time every time there is a rise in price to speak of, the short volume spikes with it. That's why you can't use short volume to indicate what the apes want to use it to indicate. Let's try it for AMC. We have to change this to AMC short volume. Whoops. New price scale. Oh, well, would you look at that? Look at this. Look at that. Look at it. Just take a look at it. Yep. Every time the blue line is AMC short volume. Every time the price spikes up, so does the short volume. Wow. It's almost like the short volume is buying, which it is. Look at that. Look at that. Perfectly. I don't know why I never thought of this before. Wait, I know. Because it doesn't make any difference. Because it doesn't change anything. Because people don't care. Here's the June squeeze. Look at all this short volume. What does that say? That says 212 million. 212 million. So, like I said, that's why, you know, if you hate these motherfuckers, then, you know, the best thing to do is just like learn some things, learn some stuff, and put it into practice instead of just listening to what idiots online say. I mean, we literally heard a guy earlier claim that it was short sellers that caused Toys R Us to go out of business, bankrupt, be liquidated. Meanwhile, Toys R Us, the company, became a private company. In other words, they didn't have a stock that was traded on the stock exchange in 2005. So from 2005 until they went out of business in 2018, they literally did not have a stock that was trading on a public market. Yet somehow, according to these clowns, it was short sellers who bankrupted the company. But the ultimate irony there has to be that Toys R Us had $5 billion in long-term debt. So maybe the Toys R Us comparison, on some level, not the level they wanted, is valid. There it is. $5 billion in long-term debt. Wow, that's a lot of money. That is a lot of money. And it wasn't the short sellers that ran them out of business. Did we finish this?
Out of nowhere, saying he wants to fly to Jersey. He wants to attack me, right? So I said to Frankie Muhammad, I said, what are you, Stunad? I told him, what are you, a Mama Luke? That you're not giving that guy wrong? And he's like,
okay, yeah, so this is just more bullshit here. Okay, let's see what we got here. Okay. Up, up. Now we're heading lower. So what time is it? 7:30 almost. I'm seeing some weird correlations happen from time to time. So typically we see stocks and the dollar kind of go in opposite directions. Sometimes we see them go together briefly. One that I'm going to be looking at this week is possibly Chevron. So they just got authorized to, I don't know, drill oil somewhere, Venezuela or something. I don't know. So I'm going to be keeping my eye on that, see what happens there. It's already at a high point, but they've also been making a shitload of money. So that's one other thing I wanted to look at too is over here on AMC. Let me go back to that actually. I'm going to bring up AMC here. See, do I have an open color? I'm only using red, apparently. So maybe we'll use purple. Okay, of course. So here's AMC. And let's go maybe to 1 hour charts. $30 minutes. And then come over to trade and bring up the purple. So we got AMC here. Here's the option chain. Actually, I'm going to go to think back, and I'm going to go back to I want to look at it from Friday. So we're looking at the historical data here from Friday. Yeah, this is all changed. Why is it all changed? See, I need volume, open interest, theoretical price, theta, market price, implied volatility. Delta's already there. Okay. Okay, that's better. So I just want to kind of look at, and some trading opportunities that may have been here. I'm not seeing too much right here in terms of directional trading, but so maybe we should not use AMC as an example. Maybe we could use this day, or that's not even. Let me just put a couple things on here. Let's put on moving average exponential. I think it's under exponential. Well, There it is. Okay, let's change this. Well, actually, it's already on 9. So leave it on 9. We're using the closing price. We'll put on the breakout signals. I'll make this yellow. Wow, that's way too many signals, but we're on a 15-minute chart anyway. We want to be on, well, we're going to have to take those breakout signals off. It's no. And that color, not working for me. Maybe that's better, maybe. Thickness. God, Thinkorswim is so weird. Okay. $11.10. Looking back at some times here. We go 1 minute. Yep, here's the 10th and 11th. So and actually, you know, you're back. Did AMC squeeze while you were gone? Yeah, it did. And it's funny. We start talking about actual trading and everybody leaves. The viewership collapses. That's hilarious because who cares about that? Who actually wants to learn anything? I'm going to look at it on here anyway. So what was one of the ones that, no, or we could look at a downside, but yeah, how about a downside? Maybe. Okay, so this is Valero. Let me bring my indicators back in here. I don't even need the stochastic. So this one here at the top is basically telling us, did the bar price candle close above or below the 9-period moving average? So you can see here, all these all are red because price candles all closed below the 9-period moving average, which is this purple line here. Make it a little bit more visible. And then here, for example, we have the price closing above it. So we got a green bar up here on the top. So that's all that this is telling us. You can visually very easily see, okay, is the price closing above or below whatever moving average you set in here? And there it is. Okay. So this is the 1 minute chart. 1 minute chart. So over here, so the rule is, I didn't mean you guys. I didn't mean you guys. I just meant, you know, the lurkers and, you know, the other 5 to 10 people that were here. But yeah, we'll let you know when AMC squeezes though, Manny. So, you know, feel free, do your thing. The rule is, at least this version of it, is 2 1 minute candles closing below the 9 EMA and 1 candle closing below on the 5 minute chart on the 9 EMA. So if we look back, and actually it'd be easier just to do this. And I really hate how, yeah, I literally can't duplicate. It's kind of annoying. But that's okay. And I don't even know what I'm looking at here. So we change this 9. Turn it on. Okay, there it is. And we'll add this price above below EMA. That's what this one's called. Oops, don't need to. So I like it at the top because it's easy to see. Okay, so now we know what we got here. And I should switch these actually. So this is 1 minute and this is 5. There we go. Okay. And you can synchronize your cursors here. So that's cool. You can see it on both at the same time. So here's where we have we have it here, but it immediately comes back up. And if you'd followed this, actually, you may have gone into a short trade and then you would have gotten blown back immediately out. But ultimately not. So we're looking for 2 consecutive candles closing below. So obviously we had a couple here beginning, but if you're smart, you're not necessarily jumping into something right at the beginning of the day. So then you're coming over here to right here. So here you have 2 consecutive, but over on the 5 minute, you don't have you do not have anything closing below the 9 EMA. So if you're being mechanical about it, which is a good way to be, then you don't have an entry there. So then you come over here. No. Then you come over here, and when you have one 5 minute closing below 9 EMA, and you have multiple 1 minutes consecutively closing below 9 EMA, so you could enter a trade here. And immediately, get freaked out and think that you screwed up because what happened? Right, price bounced back up. But ultimately, if you had the, whatever, diamond hands to hold through the day, I guess I'd say, because the rest of the day, once you got over here, so you have some green, you have some green. Maybe you want to see 2, 5 consecutively. You want to see that? You're over here, right here. Actually, it's a better entry point anyway. It's not so much the rule as sticking to it once you determine it. So I generally like to see two on each, definitely on the 1 minute, but sometimes, I'm not always mechanical and I end up losing money. But let's say that you took this entry here at 140. I'm sorry, no. Is that right? Yeah, no, that's right. Why does this look different? Oh, that's why. That's why. Okay. Okay. So we're looking to get in at like 1050 or so. Right in this range here. All right, let's pop back over to Thinkorswim. Go to analyze, go to Valero. And so we're looking for something. Price was around 140. So let's say that, I don't know, let's just go for the 142, 145. I don't know. So what I'm going to do, copy this ticker for the option, paste it in here. So now we're looking at the chart whenever it loads. Whenever it loads, any moment now. Oh yeah. Maybe we can't get that because it is a, I don't know. Expired option? No, that should definitely come up still, I think. What the freaking man? It's pulling up the price. That's weird. Okay, there it is for some reason. Always important to check to see if there's liquidity in it. I don't think there is. No, nope. So we would have had to gone with the 140, or maybe not really. Guess that wasn't such a great example. Well, anyway, we'll pretend like it was. So we'll go to the, maybe we need to go away from this expiration to a standard expiration. Yeah, that's better anyway. So let's go with the 140. Still kind of high spread, but that's all right. So let's get this. Let's try this. Well, I guess there wasn't a lot of volume on that either. Thought there was. A volume of 10. Okay. I'm just trying to show that you could have made money. That's all. Here's a 140 and well, okay, screw Valero. I don't know why they went down so much anyway. Okay, well, never mind on that example there, but basically, this is a strategy that can work pretty well. So let's go to a different one. I don't know. I mean, we could just do SPY, but I don't really want to do that. Maybe Friday wasn't the best day to look at. Maybe Tuesday. So if you're going for basically two consecutive closes above the 9 EMA on a 1 minute and 5 minute, for day trading options. Could have done, you could, here's some potential. And I'm just going to look at the 5-minute, but let me see. So here's a second. Could do two on the 1 minute, one on the 5-minute, or two on both. Either way, you probably would have entered about here. And you don't have two consecutive reds until you get to here. So that's about $1 there. Dollar price rise there. Then, and you sort of have to play some of this by ear a little bit, because you got a couple fake outs maybe here. But assuming an entry here, like right here, I realize there's two there, and two there. But by that point in the day, yeah, it can reverse, but the tone's set. So if you can push through that, you would have, if you believe the tone was set, you could have rode another, over $2 move, or combined a $3 move. And this is just looking at moving average. Plus the macro whatever analysis. So the market's been going up. It's retarded, but it's been going up. I'll have to do more. I'll have to prepare some more remarks about this and examples. But this it's not a bad strategy. Not a bad strategy. Are we going to crash this week or soon? Model 3 dude says no, we are not going to crash. I'm not sure how serious he's being, but who knows? I think you got a lot of, well, there's a lot of things. It's a lot of things. China, look at China. Look at Europe. I mean, two different reasons, but both of them. We are going into a period. Well, Thursday is December 1st. In terms of the calendar, not too much tomorrow. Tuesday, you have home data, house price index. Wednesday, mortgage data, ADP, employment data, GDP, price index, PCE, price index, JOLTS, job openings, some more home data, home sales data, job opening quits. Thursday, some personal spending data, some Fed speeches thrown in there. Friday, employment data, non-farm payrolls. So not the most, super important, but Bad Back's talking about next week, the following week. Jobs, December 8th. Initial jobless claims continuing, and the average. And Friday, PPI. And it looks like they're forecasting PPI month over month to be 0.1% higher. They're forecasting the core PPI to be 0.1% higher month over month. Yet they're predicting the core PPI year over year to be down 0.1%, as well as the PPI down 0.2% year over year. Week after that, CPI and rates. Rates. CPI Tuesday, December 13th. And is the FOMC meeting? Yeah, it's the Wednesday, the 14th. So it's the next day. So with the CPI here, they're predicting, at least at this point, core inflation to be down 0.1%, inflation to be down 0.1%, inflation rate month over month up 0.1%, core inflation rate month over month up 0.1%. I've said it many times. I'll reiterate it now. Inflation has not peaked. We will see higher numbers yet. We will. That's my prediction, my opinion. Especially if the PPI numbers are higher, then that's pretty much a guarantee of that. But anyway, a lot of people don't think so, apparently, or they want to reinterpret a bear market short covering rally as some kind of pivot. I mean, that's really what's happening here. That's really what happened. You have the dumbass mainstream media. And let me reiterate, dumbass mainstream media. And I'm talking about CNBC, Fox Business. They give credence to this nonsensical, ridiculous argument or statement. Somehow, because the Federal Reserve is, no, they're not going to stop raising interest rates. The rates are still going to go up. Yeah. But they're going to go up by less. So that's a reason for the market to rally. It's completely absurd, nonsensical, brain dead. Completely ridiculous. It's the same way that they reframe CPI. Oh, CPI's down. No, it's not. CPI's up. It rose by a smaller amount. Yes. Great. Fantastic. Prices are still higher. They have not come down from the last CPI. So you have the dumbass mainstream media repeating these brain dead narratives, convincing people that somehow, even though the data does not show it at all, well, they teach you how to misinterpret the data, or they misinterpret the data, and that's the impression that people get. That somehow, this constitutes a pivot. Somehow things are, looking rosy, and it's time for another bull market to start. When in reality, all you have is a short covering rally. Same shit you've had all year. It's so stupid. It is ridiculous. It's dumb. It's literally stupid. It shows you how desperate and just ridiculous these man children of Wall Street really are. That's how ridiculous they are. I mean, seriously. Seriously. Well, it wasn't a pivot back here, obviously, in fucking January or March or May or August that they tried to say pivot here. And this is all so far that they could muster. I mean, let me tell you, one hell of a rally. It's ridiculous. Wall Street, ridiculous. Just say no, because they can't say it. They can't go on CNBC and say, oh, you know what? This is just a short covering rally. The first time they did that, all hell broke loose. Every retail investor in the world was up in arms. Oh my God, they just admitted. They didn't admit shit. You just admitted you don't know the basics. It will keep things propped up until after Christmas and start the new year with bad news. Antoinette doesn't think it's the peak. All hell breaks loose. Yeah, I mean, plus, you know, we've been looking at this too. Credit card balance. Excuse me. The credit card balance, which is just, you know, you want something that's gone to the moon. Credit card balances nearly $1 trillion. Nearly $1 trillion. I mean, and it's interesting. Look at when it really shot up. 2010. I don't know what happened here, but it doubled. Maybe they calculated it differently or something. Who knows? But you know, before the pandemic, yeah, it was getting up there. $850 billion. Then stimulus came in. Then last summer, literally, stimulus ran out, stopped it. Unemployment ended. And boy, you're back up by April of March or April of this year. You're back to pre-pandemic, and then some. Wild. We can also look at the M2 money stock, money, balance sheet, amount of money in circulation. What's it called? Anyway, M2. We can see that that's actually coming off a little bit, but I mean, not much. Not much at all. We're still in the 21 trillion handle. So, yeah. Again, well, we don't see that weird spike up in 2010 here on this. What about student loan debt? I was looking at this the other day. Owned and securitized student loans. Oh, all-time high. 1.7 trillion. 1.7 trillion. How about corporate debt? Non-financial corporate business, debt securities and loans, liability level. Okay, we're talking billions here. Look at this. All-time high. So you mean to tell me, you know, seriously, at a point, stock market was at all-time highs last about a year ago. Non-financial corporations were at that point sitting on an all-time high of debt of 12 trillion. And we're already up to, I'm sorry, 12 trillion, and we're already up 500 billion from there. Does it look like a healthy system? That's my question. And I would say, fuck no. It is a fucked up, ailing system. It's unsustainable ultimately, but who knows? Who knows? Many businesses that thought the Christmas holiday would save them will start throwing in the towel. First, jobs and housing businesses, bankruptcies rolling in, and finally banks. Yeah, yeah. We're already starting to see the layoffs from the big boys. Yeah, you're going to have a lot of small. Um, look out this week for propaganda about, oh, it was the, you know, Black Friday, the way they're going to spin it, and maybe it's true, but you know, something has to be positive, right? Has to be the most of something. Has to be a record somehow. Everything has to be a record. Highest online sales on Black Friday ever. Great. Fabulous. More credit card spending. Look for those credit card balances to go up. But this is crazy. I don't even know. Financial business debt. Oh boy. Domestic financial sectors, debt securities, liability level. Only 16 trillion in that sector. And it went up by 2 trillion. How did it go up by 2 trillion in a period when they added how much money to the system? I mean, that's ridiculous. $6 or so trillion? I mean, amazing. What's the other thing that we look at here? I forget. I don't know. But if you look at the actual CPI, sticky price consumer index, less food and energy. It appears to be abating a little bit, but like I said, we'll see. Higher markets, higher spending, all that stuff, that does not play nicely with lower inflation. It just doesn't make sense. This doesn't make sense. It's not. I mean, unless they are literally giving fraudulent data, like Donahue George says, which I doubt, or changing the way that they're calculating this data. Personally, I don't see how it could. I mean, maybe it'll be a nominal, marginal change, but I don't see how it's compatible. I don't see how it's compatible. Higher prices, higher inflation, market going higher, at least from the this last dumbass rally. I mean, you're looking at about 15% right there. About 15%, and we're talking about down, about 15%. And I think that what's his face? What's his name? Not Chanos. Well, anyway, calling for 50%. 50%. I mean, you're looking at down into, I don't know if I'm not saying this, I'm just saying somebody's saying it. You're looking at 200 on the S&P. I mean, that would take us back to roughly 2016. Now, again, I'm not saying I think that's going to happen. Fed is going to have to raise rates for at least 6 more months. I don't know. I mean, it does take a while for some of this stuff to take effect, because if you think about it, if you have anything that's on a contract, those terms are not going to change until you renew the contract, re-sign the contract. So I think we'll see, but it's even questionable how much that will even help. It'll help with some demand, but I mean the big problem, as far as I'm concerned, and we subscribe to the monetary theory of inflation. This is the problem right here. There's too much money that was added that's still out there for there to be any real meaningful change. I mean, and look, the amount that this has gone down, and I can't do any measurement tools here, but the very minimal amount that this has sort of started to roll over a little bit. I mean, is that really? Look at the CPI. it's barely started to roll over too. So I think that, yeah, the interest rates are important in cooling demand and whatnot. But at the end of the day, it's this money supply that where the solution to this problem lies. But the problem is, well, there's a lot of problems, but can only take so much out. And it's the interest rates are the big thing. That's what they talk about. So M1, let's see. So we're on M2. Sorry, M2. M1. M1 is currency. Let's see. Currency outside the U.S. Treasury, Federal Reserve banks, and the vaults of depository institutions. Demand deposits at commercial banks. Other liquid deposits. Savings deposits. Okay, so what's in the banks, basically? Now, M2 is everything M1 plus small denomination time deposits, less IRA and HEG balances, balances in retail money market funds, less IRAs. So it's a few more things. And then you also have M3, which is M1, M2, and something else. Get. I don't remember. I don't look at it though, so. Yeah, I know this is discontinued, but it doesn't. I think it includes loans or something like that. So it's essentially it's not a true. I don't know. Maybe somebody knows, but currency. Yeah, it includes debt securities. So that's a difference. And M2, not the BMW M2, is basically all the balances. So all the deposits. Anyway, we'll take a peek at the futures one last time, and then I got to get out of here. But I do appreciate everybody being here as always, and it's going to be an interesting week, I think. I don't know where it's going. I don't think. I mean, yeah, I see some downside coming. I'm not, but I've been bearish, so who knows? And I've also gotten some highs in the face recently, so I don't know. Don't listen to me. Just if it's bearish, trade it bearish. Bullish, trade it bullish, or don't trade it at all. It's the best thing. So, and I don't know, Chevron, we'll see. Good. Let's go over here real quick. Oh, man. I'm clicking on the wrong things. Pension funds going down. Really? Ah, okay. So I don't know why I'm putting it in order of upload date. Should give me his newest video first. It doesn't. Thank you, YouTube, Google. Apple losing $1 billion a week. This will make AMC go to the moon.
It's not financial advice, it's not legal advice, for entertainment, educational purposes only, and everything I say is my opinion. Please don't make any financial decision based on anything I say in these videos.
Actually, where in the hell is my favorite financial jihadist? Yeah. Didn't put anything out today. Interesting. Well.
That being said, hit the like button, subscribe button, all that YouTube algorithm stuff, so you get the videos I put them out. So you can see them, analyze that data. Listen.
Do that. Do hit the like button.
Apple is having major problems with their factories in China. But the factory in particular is the factory that's producing the iPhone 14s. And the thing is, because of these problems, and a lot of these problems have to do with the COVID restrictions.
Thank you.
Plus, there was some kind of protest at the factory, and what we would call scabs. They brought in scabs to do the work. And they were supposed to pay the scabs to work, and then the scabs didn't get paid, so they refused to work. And then they started fighting with the security guards. I mean, it was just some outrageous nonsense that allegedly went on at this iPhone 14 factory in China. But how that really affects us as AMC investors.
This is what I wanted. This is what we came for right here. Factory. Yep. Oh man.
Is that?
Oh my God. I'm really stretching out the drama on this one. Right. I didn't catch that. That's funny, yo.
Apple is supposed to lose $1 billion a week until this problem gets rectified. So who knows if it's going to get rectified in a month, 2 months, 3 months, 6 months. Nobody really knows. Nobody really knows. Like, they're going to say, oh, we're going to get it resolved in a week. We're going to get it resolved in 2 weeks. But nobody knows when it's going to be resolved because of the COVID restrictions, because of the people, the employees fighting in the street. So who knows when this is really going to get resolved. And until it gets resolved, Apple is losing $1 billion a week. That's what it's suggesting. But why that's really, really important is this. Apple makes up majority of the SPY. So if Apple is dropping, you best believe the SPY is going to drop too. And then you got all these guys, all these hedges, all these bad actors who are long on Apple.
Now, wait a minute. Okay. Okay, mister. Let's see about that. All right, here's Apple. Okay. Here is AMC is going to be on a comparison line. Yeah, pretty much. If Apple crashes, AMC is going to crash. Don't see really too much else you can say there. He's wrong again. I mean, surprise, surprise. Here's weekly. Yep. Apple goes up, AMC goes up. Apple goes down, AMC goes down. Sorry, dude.
On the SPY. So when Apple and the SPY start dropping?
When Apple and the SPY start dropping. Okay, well we'll put the SPY on there too. And of course, I mean Apple is the SPY, essentially. Yeah, same exact curve. Let's put AMC back on there again. Yep. Oh, yep. When Apple and the SPY start dropping, AMC drops with it. That's all there is to say.
You know what happens.
AMC drops too.
Forced liquidations, and then they'll be forced to start covering their shorts. And when they're forced to start...
Oh, they'll be forced to cover their shorts at lower and lower prices. What an idiot.
Covering their shorts.
Come on.
AMC GME starts going to the moon. Anyway, hit the like button, subscribe button on that YouTube algorithm.
Why in the fuck would that ever happen?
Factory issues in China and losing $1 billion a week. Anyway, have a great day. God bless. I appreciate y'all on this journey.
I mean, honestly, what do I think about it? Good. Good. I'm glad. I'm glad they are. Yeah, I'm glad they are. Let them lose $10 billion a day for all I fucking care. It's overvalued junk anyway. He's giggling like he has it all figured out. These people cannot be real. Only thing forced liquidated is his back. Oh, Jesus Christ. Steal the CSI intro. Okay. I could do that. So I'll play it. Play it out. I don't know what does this mean? Play it out. Fucking thing sucks. Fuck it. I'll do it live. I'll write it. We'll do it live. All right. Here's this. Here it is. We'll steal the CSI intro. Or for something different. And you know, this will play us out. We'll just do it live. Exactly. So have a good week. I'll catch up with you guys in the first part of this week sometime. Yeah, otherwise I'll see you in Telegram. Here's the CSI intro as something special. Oh, I forgot. I can't use that one because of the song. Silly me. I'm going to get my ass handed to me on the copyright question. Damn it. So I guess we do have to use this CSI. Motherfucker. Where is he? Where is he? Where are you? You little asshole. Damn it. That almost worked. But then I forgot. Son of a bitch. Here it is.
I can feel the blood creeping up from the heathens. Got will, got fight, got pride, got reason. If they wanna go eat, then you know I'm gonna feed them. If you're coming for me, hope you're ready for a demon. I got eyes in the back of my head. Take me for granted, and you know I'm
all right, guys.
with the webs I'm weaving.
See you later.
What's up, everybody? It's the Common Sense Investor coming at you with another video. This video